This fucking thing. Test 1, 2. Not even live right now? I don't even know. There we go. You're live. I've been having some internet issues overnight. I've got like my computer's getting the blue screen of death, but I think it's related to like forced updates or something. And then I tried to save a brief last night and it didn't save. Got forced to do like a 2FA thing, and I'm like kind of scratching my head. I wonder if they're doing some more bullshit like Iran is fucking around or something overnight. Members. There we go. So I'll be on here this morning I'll be on here between like 10:30 and 11. There's not much to do here this morning. Be like 600-ish. That's 6,000. See down here? Here is 6,000. You want to be watching. Of course, SPX doesn't show up until 9:30. But you want to be watching 6,000 basically, or 600 above or below. We've got. I did post in a market brief last night or this morning a brief that showed a bull and bear outcome. We'll talk about why that is, mostly because we have like two tractor beams. We have like a tractor beam for the collar, but that could hit after month end. It's not necessarily like a beam, like a tractor beam for like today or end of month. And then we got a bunch of round numbers, right? We got 6,000, we got 605, 610, 595, 590, and it's always a guessing game where we wind up on OPEX month end. So there's a lot of like leeway here. We're in the vicinity. It is interesting to see where we are right now on
reports here on X
that day, because
reportedly attacking Iran's supreme leader's underground headquarters.
It gives a it gives like an idea where we should be for OPEX. If we're at, think about this, if we're on FOMC, they're giving leeway for us to trade higher and lower from here. Probably perfectly priced for any outcome today. To come back to mean, but that could also be on the month end. We'll talk more about it here in a minute. It's still a fucking guessing game. I'll be back with you guys just a minute here. One thing to note is you should see some like classic setups in here. Until about 10:30, 11:30 this morning, it should just be like easy setups. There is one more thing to tell you, which is I did go back and look at some prior FOMC on Vixperation days, and they were pretty ugly. I can't find an edge in it, but they started selling like right on the bell. So be wary of that. I wouldn't say trade it, but if you see selling off the bell, we could sell hard all day long. We're not there yet, so there's no reason to be trading that unless you start to see a reversal early morning. I would just keep a heads up on early morning. Between now and 10:30, keep an eye on any heavy selling. If you see it, I'll jump on the air and say something to you.
1 minute to go until we get the market on open data. Nippon still to hold press conference on Thursday, 10 a.m. Japan time. Ten seconds. Also, Israel's defense minister Katz says Air Force destroyed Iranian Internal Security Agency headquarters. Market on open, S&P 500 72 million to the buy side, Nasdaq 100 13 million to the sell side, Dow 30 buy side 53 million, and Mag 7 sell side 0.8 million. Just a heads up, U.S. Defense Secretary Hegseth testifies before the Senate Armed Services Committee. OpenAI starts selling ChatGPT at a discount according to the information. So heads up, we have posted out the video where Hegseth is speaking live at the Senate hearing on Israel-Iran conflict. So again, just testifying at the Senate. So ChatGPT discount ranges from 10 to 20%. Nasdaq turns lower, last down about 0.1%. Watchdogs say that Iran near bomb-grade uranium location uncertain. So again, Watchdog says Iran near bomb-grade uranium location uncertain. Further detail into this, the United Nations nuclear watchdog, said the location of Iran's near bomb-grade stockpile of enriched uranium cannot currently be verified, as Israel's ongoing military assault is preventing inspectors from doing their work. So Iran's 409 kilograms or 902 pounds of highly enriched uranium is enough to produce 10 nuclear warheads and should theoretically be secured under an International Atomic Energy Agency seal at an underground facility at Isfahan. But IAEA Director General Grossi said Wednesday its whereabouts are now unclear, given Tehran warned him the stockpile could be moved in the event of an Israeli attack. India's trade minister says India is currently negotiating 9 trade deals, including with the EU.
Check, check, 1, 2, mic check. Oh, this. Oh my God, my voice. There it goes. It's already popping. This week has been one for the record books. Oh no, what was that? Hold on, I'll be right back, guys.
Defense Secretary Hegseth says we are working to protect navigation in the Red Sea.
Whoop. There goes 600 right there. Gonna be coming into a little bit of resistance soon. In just a moment here. Doesn't mean we can't trade above it. It's like usual, look for a back test. We got some a little bit more up here to go. Right there. It could be all the way down there. One more little, give it one more little bit. One little bit more. Give me a little tiny bit more. Just another C here. Baby. I'll tell you, this is one for the record books here, boys and girls. It really is. Like, I came into I think we might push one more. It might be one more big old green bar right there. We might have hit it. That might be enough. Watch out for the roll here. Take some off. See if we can get one more pump over this and freak everybody out. That's where we're going to squeeze above this zone right here. Just so you know. That's where the sellers are, right about there. There at that's 6,000 on
Trump says if the Fed would lower rates, we would buy debt for a lot less.
That's 6,000 right there on SPX. And that's where the sell gang is. They're trying to keep us below that.
Trump speaking to reporters at the White House. We'll see if we can get a live video and we'll pop it up for you in the feed.
We can get a little bit of a delta and gamma on our side, though. As we expire, we got Vixperation too today.
Trump says Powell probably won't cut today.
If we had traded up into this morning, I think it would have bloodbathed this shit. But I think we're going to go up today. We'll find out more. I guess, you know, D-Gens want it all that day and then more later on. They might not get it today. Okay, so apologize for being late this morning.
Poor job again.
I got a I came into just before Father's Day. My cat got I think my cat got hit by a car. I don't know exactly what happened to her, but she's not my cat. She's my daughter's cats. My daughters have 2 cats and 2 dogs. One of the dogs is more like mine. The other dog is a lover. The dog's a border collie. He's like a guardian, protector or whatever. Herds up the kids, make sure they don't get any trouble. He's done his job. He's a good goddamn dog. Now the cats, we've been through a bunch of them. As you know, cats do anything to get outside, and you know they come and they go. They're good. They're one of the like the middle animals.
Should be 2 points lower.
They're one of the middle animals.
Trump on Fed rate says would be nice to be 2.5 points lower.
Sorry, Trump, you're not getting that when you're fucking scaling warfare. That ain't happening, brosif. You're gonna get a more hawkish tone. There is a counter trade to that, which would be Besant and just so you know how like Trump says things like the Fed is political. Besant and Powell have breakfast every week. These guys all know each other, so that shit works both ways. Let's just call it for what it is, right? Trump does the same fucking shit. So, but this whole war thing does not help Trump's case in any way, shape, or form at all. As a matter of fact, Trump. I'll be honest. I'll just be honest with you. Trump should just be quiet this morning about this shit because the like escalation of U.S. involvement in war, if it does come to that, it's great for deficit, but it just leaves more uncertainty for the Fed. Where the Fed was wait and see, the last FOMC, they were a little bit more dovish. They had changed some slight language and said, hey, it looks like we're going to get some tariff deals. Looks like we're going to get some like calming down of geopolitical, right? Fairs, right? Like get Russia, get Ukraine to the table. And, this throws a monkey wrench into that, doesn't it? Well, Iran and Israel and
European rate cuts and calling for U.S. rate cuts.
I want to make a point here this morning, something that rubbed my ass the wrong way yesterday, and I couldn't really put a finger on it.
Keep an eye on the stock markets. U.S. stocks rise.
Think about it last night. It took me like a couple hours.
And Dow up each about 0.3%.
To think about it. And I got to tell you what it was.
Trump says that I will wait until Powell gets out and then go long term.
Tammy Bruce came out yesterday.
So he says, I'm going to go very short term and get rates way down and then go long term.
Tammy Bruce came out yesterday, and this talk that he's doing, yeah, we'll get a dovish Fed when Jerome leaves. Okay. You'll try to make him a lame duck, but like yesterday, Tammy Bruce comes out. You know why she did that presser yesterday? Because 20% of Israel's population are U.S. citizens, and they're trying to stop U.S. citizens from exiting Israel. So they're basically being held hostage right now. That's real, and that's why Tammy Bruce was out there talking. But there was a moment when she was out there yesterday, and it really fucking bothered me, and she was referring to Trump posts. And that scares the shit out of me. And I couldn't figure out how to put my finger on it, and I'll tell you what it was.
Tremendous appetite for our debt.
If you have, normally in any kind of government, that was the FOMC, normally in any kind of government, right? In the power structure, especially in the executive, you've got one guy at the top, right? They're the ruler, right? Okay, that's fine. But normally what happens is when you have policy, and in this case, diplomacy, setting foreign policy, you don't have a lot of time as the executive. And any CEO will tell you this. So it's actually bottom up, not top down. You have diplomats with experience. You bring them on board, even if they're your guy or your girl. You have that like You have a group of people that help you with diplomacy, setting policy, intelligence gathering, you name it. And normally what happens is those people will bring you that information, and then you make a decision on that for what you're going to do as the executive. And yesterday she was like fucking quoting, Truth Social posts. And that to me is dangerous for Trump, because what happens is you've got, what happens is that you've got a, how do I describe it? You have like
strikes says I may not.
Everything in one place, right? All with Trump, and then
Iran has a lot of trouble.
If you were a foreign adversary,
says Iran wants to negotiate. Why didn't they before?
You would know yesterday that you don't need to go. You don't need to break into intelligence or diplomats' shit and find anything out, because you can just go right to the source. So now it's just like one source that you have to work on. So you become the mark, and so I was a little upset about that yesterday, or at least her saying it publicly. I shouldn't say whether that's true or not. I don't care. She should have said no comment yesterday at the very least. I got no comment. And she kind of folded like a cheap suit on that interview, that presser yesterday, and that kind of bothered me, because any adversary would just say, "Well, I'll just go after Trump then." I don't need to go. I don't need to put any kind of time, effort, money,
Iran has
spycraft, doesn't matter anywhere else, because those people aren't going to bring misinformation to Trump. I just got one place I have to go after.
Trump said, "I said it's very late,"
and he's being dragged into this shit right now. Because he is the decider, but not only the decider, he's doing his own research,
Trump says there's
which is bad.
Between now and a week ago,
and it's becoming public.
On Iran Talk says there's a big difference between now and a week ago,
and that's my big question about today.
Come to the White House,
which is, if I was Jerome, we've got hawkish Jerome, we've got uncertain Jerome, and then we got a slightly more dovish Jerome. Hey, it looks like these trade deals are coming together, right? Looks like we have a little bit less uncertainty, and it looks like maybe it is not persistent.
A movement was a downside here. Trump says on Iran that I don't know how much longer it will go on.
Maybe it won't be as persistent. Maybe even if it is persistent, it's still a one-time hit, and the consumer is still kind of okay. So Jerome
have no air defense whatsoever.
So Jerome gets a little bit more dovish for Trump, which rightfully so. But then all of a sudden you got this noise. And you could kind of tell that Trump doesn't want this noise. You can see it. He's angry. It's a monkey wrench in the plan for him for the big, beautiful bill, tax cuts, all this other stuff that he wants to do, changing the economy. And I get it. I'm not a Trumper, but, I'm aware. I'm pragmatic. You know what I mean? I can see things for what they are. And I'm not for or against this stuff. I'm telling you what this guy's trying to do. And they throw a fucking monkey wrench at him. And, it's like, who do you go to do it? You go right to Trump. You don't fucking spoof anybody else. Just go right to him, because he's got people out there saying shit that they shouldn't be saying. Anyways. That was my rant for yesterday. And that shit ground my gears all night long last night. So anyways, moving on from that.
Down some move from the dollar as well.
Then, so this weekend I got a dying cat, right? And I gotta fix the cat. Then I gotta keep the cat with me because I think the cat might die. Sometimes animals, even when you fix them, they'll still start dying. They'll like go to this like death thing. They'll start like lay down by themselves somewhere. You come back in a couple days and they're dead.
Trump on
they'll stop eating, drinking water. Stop going to the bathroom. You got to clean them. You got to feed them. Try to feed them. Try to like get a little injector, put the water in their mouth and stuff like that.
Intentions.
So I got that starting up, and then one of my closest friends from my youth or my middle ages is in a coma that the hospital does not think is going to come out of.
Trump says
that happened.
It's going to be very big, maybe less than a week.
And then I got Father's Day. It's like Father's Day. Okay, let's go do all that stuff that I got to do. And so as I'm doing Father's Day, there's a bunch of shit that wasn't done around my house. So of course I'm doing that shit on top of it. Like, well, you guys didn't do any of this, you didn't do any of that, and the pool's looking like a hot mess, and blah blah blah. I'm doing all that, and then I come to the market right for this week. And yesterday,
Iran says, "Why should a hostile country have a nuclear weapon?"
and dude, I gotta tell you guys something. Like, I've been like teach my daughter how to drive, get her a driver's license.
Says, "We'll see what happens. Nothing's finished."
And I let her drive all the time with me.
It's going to go on.
And I try to watch how she drives and just pick things out, like wisdom, father, someone that cares for you, to say, hey, like, this stuff that you're doing right here, you're going to get in a car accident. Like, this one thing and this other thing and this other thing you continually do on repeat, I promise you, it's not going to take long. You're going to be in a car accident. And she does a few of those things. Like, she doesn't, she'll look right, but not like look right when she's turning. Or she'll check her mirror, but not right. So she's got a blind spot. I'm like, you can't be doing that shit. I guarantee one of these fucking days you're going to hit a car. Guaranteed. And one of the things that she does is she likes to turn too tightly. And she's like barely missing cars and barely missing trees. Fucking you name it, right? Trash cans, kids, dogs, everything. It's dangerous. So last week I was talking to her about this specific thing. And I'm like, look, you can't do this. And I was like, you're going to get in an accident soon. I was like, you're doing this a lot with me in the car. And she got mad at me. And of course, I'm old. And you know how you are. I was like this when I was a kid. My dad would try to tell me stuff. And when I was a kid, I was like, yeah, whatever, old man, fuck you. And you don't know. And I'm terminally unique. And there's something the kids don't have. They don't have wisdom. They don't have it. And kids aren't built with an innate want to learn wisdom either. They will, but it's hard. Sometimes they'll do it with people that are not their parents, like a teacher. A good teacher can do that. Different role models in their life. But a parent, it's hard for a parent to be like, hey, I've been through this. And a child to really, really absorb that and then take it for what it really is. And so I was talking to her last week about this, and I'm like, look, they got this thing called the Darwin Award. Now, my daughter did private school. She did private school, and then during COVID, she went to private online school with a private tutor. And so she went through the COVID thing for the last part of her high school. And then she did some in-person stuff at the University of Michigan for a couple of years.
Trump on Trump card says, I think Apple will buy a lot of them.
No, they won't. He's so awesome. It's always constant fucking pump. So I'm talking to my daughter last week, and I'm like, look, there's one thing you didn't go through, and that's high school, in a large high school. I'm going to tell you what happens is that they have this thing called the Darwin Award. I'm like, and you get a lot of kids that die when they're young from genital defects. And then right around 15, 16, 17, 18, most high school kids, as they go through high school, they encounter a lot of not a lot, but like a group of friends will pass away or become maimed doing stupid shit. I think most of you that have been in a large enough high school, you've seen that, right? It's either drugs, a car accident, sports, anything, backflip, break your neck, dirt bike accident.
After Trump speaks with Iran,
it's very frequent.
Saying that Iran wants to negotiate.
Oh, there we go. Get up there. Get on up there. Slap it. Slap it. Slap it. Slap it. So, what happens is she never went through a lot of that stuff. And so she doesn't want to take my wisdom. And I'm like, look, you don't want to be that kid. You just become a statistic where they cull the herd at different points in life. And it's just like smoking, right? Smoke your whole life. Eventually, you're going to get culled early. You do different things at different points in your life. And, the culling goes on until there's nobody left and you're dead, right? And, of course, what did she do? She sideswiped somebody yesterday. It was pretty bad. I took a picture and two pictures and put it in the Discord this morning. There is some good stuff. She's safe. She's not hurt that I can see as of yet. So there's no whiplash that I can tell this morning. I'm grateful that she's not dead or anything or hurt. Very grateful. I'm not mad at her or anything, but it's stressful. And then, of course, she's hurt because I just had this conversation with her. So she's embarrassed. And I haven't really delved too much into it with her yet. And but then it brings up a bunch of stuff from my dad and all this other stuff. So this whole week has been like crazy town. So anyways, good morning to all of you. We get tomorrow off, so maybe I can go downstairs, go outside, and chop a tree down or something, and blow off some stress. All right, so this morning, what do we got going on? Let's do some chatting here. Good morning to everybody. How y'all doing? So easy layups usually in the morning. Sometimes we sell. I went back and looked at some Vixperations that fall on an FOMC, and they weren't that pretty. But this setup is not exactly the same as those, so I couldn't see any edge. So I didn't post anything about it. I couldn't find like an edge that was worth looking at, but I do want you to pay attention to what? 10 a.m., right? 10:30. Let's see what happens there. Also, keep in mind 12 to 1 o'clock today. Those may not be as important today.
Emerging stocks and emerging FX pair losses, as Trump says Iran wants talks.
As they may not be as important today. Because we have a one-off event. So
we're going to make a trade deal with India.
Trump's going to be like, we have a peace deal with Iran and a trade deal with Iran too. The Ayatollah's going to come and be like, I haven't even spoken to this guy. So there's no edge in that. And then yesterday, I was hoping for a squeeze up yesterday into the close or into the open this morning to sell Vixperation and FOMC. That is the norm de rigueur for these kind of events if we have a Vixperation the same day. Yesterday, what we did was we were at 6,000 on the open. Right? Let's go back and look at yesterday really quick. Wrong fucking one here. Hold on here. No, wrong one. What am I looking for here? What is that?
So Trump concludes comments to reporters at the White House.
Hold on here. Let's go this one. Nope, that's not the right one. Hold on here. Hang tight here, boys and girls. I've got some wonky. Hold on here. We got some wonky shit going on. Like this trigger screen's supposed to be. Let me see here. Trigger screen should be this one. Yeah, that one. Okay, so what I want to show you is yesterday. What took place here yesterday? Where is yesterday? This is kind of important, right? Let's do Tuesday. And yesterday in the Discord, I was asked, what's going to happen today, Cap? And I said,
Trump's still speaking now. Says Trump on patience for Iran. Says, my patience has already run out. So at the moment on Fox News, he's currently just walking around the lawn at the moment. But just another headline that's come through. Trump asked about Iran's leader, says, good luck.
Let's look right here at yesterday. So this is 9:30 right here, right? And we're parked right on. We're parked right on. Usually about 12:30, right? Oh, 10:30, excuse me. And then nope, this usually happens at 12:30. Yeah, somewhere in there. 12:30, somewhere in there. So we were above yesterday, the 600, 6,000 level, right? So ramp this shit up. This is what we're doing right now, right? Come in at 10 a.m. What they did was tried to sell it, right? And then we did this Batwing thing over here. You guys know about the Batwing, right? And at 12:30, they started selling again. So sell it at 10:30, sell it. So we got flows, right? Downward, not upward. So not a trend day, right? And that kind of that kind of does away with the murder the VIX trade, doesn't it? On the eve of Vixperation. Instead, we get no trend. I gotta mute this here for a minute. Trump can fuck off. It's FOMC. So, no offense to Trump, but he can fuck right off. So we come up here and we get sell pressure yesterday at 10, and we know that like 10:30 we're either going to get up volume or down volume. And instead we get down volume. We get down volume again. And in the Discord they said, "Hey, are we buying this dip at 6?" And I'm like, "No, we're not. We're going to see what happens. We're going to see if we can turn it back around and up again into the close, maybe ramp it up and print the highs into either, if not the end of the day, into tomorrow open." Instead, that didn't happen, did it? Underneath 6,000, reject and start heading to the downside. And what do? We trade all the way down to the end of the day, whoop, right? And we hit major trend right here. Here's 3 or 4 p.m. I think that's 4 p.m. About there. We blast down into the gamma level, gamma support, bounce back up off gamma, and then after the bell, we hit a major trend. So that puts murder the VIX out the window into today. Now we recover in the overnight. We talk about that yesterday, right? If we have a low in positive gamma, and we blast, we should make big overnight moves, small moves, create delta positions for the market to move violently, up or down, all else equal. We ended up going up last night, and we're going up again right now into Vixperation. So, FOMC aside, I've got this bull chart here where I would have preferred to come in, right, somewhere in a high up here into Vixperation and then sell the fuck out of FOMC to the downside, like literally blast that shit to the depths of hell. We're not there anymore. You know, we're not on the upside into Vixperation today for FOMC. So for today, there is a bear trade here and a bull trade, believe it or not. So for today, we're parked where again? 6,000, price to perfection, right? For an upside move on FOMC or a downside move on FOMC. The big question here becomes, can we hold 6,000 or not? And if this is trend over here, right? You guys, I'll show you that this is trend right here. If we can't get underneath this, we can't start to unlock, 59.05 or anything. We can't even unlock the daily trigger. And if that's not the way, then the way is higher, right? And there's no unclench either. I want to also point something out to you from yesterday. Let me go down here and show you this. So for all that doom and gloom yesterday, right, where did we park? You've got World War III stuff, right? World War III stuff again yesterday. And you might be thinking to yourself, well, we were down because of World War III shit. That's not true. We already have hedging happening, right? We got hedging, and then we have the amplification of World War III put hedging. So you got a way to think about that. You got natural hedging for the quarterly OPEX cycle. Like I'm going to take the money and run up here, right? Taking the money, and I'm going to begin a hedging cycle in here. But then you get war hedging. So now you've got two trades. You've got natural quarterly hedging, and now you've got World War III hedging. But you don't have the right mix. You don't have real money selling. And as a matter of fact, you're getting real money buying. So you got like war hedging, quarterly hedging, and then at the same time, look at this. You got people buying. Buy. Buy. And you don't have the mix yet. You got two sets of hedges, but you don't have real money selling to go along with it. So there's kind of a trap going on here. So, and let me show you this. Now, that doesn't mean that we won't print the war hedging if we get something that's material that triggers real money selling, or if everyone thinks that they're out of the, like, we get a deal, maybe you can print that briefly to go higher. You know, like, we had a lot of time in here. You know, they get a deal, you got the hedge still on. Not the quarterly hedge, but the war hedge. Maybe you can catch it afterwards, but they're not going to print that shit for you at all. It actually gives us a bottom for now to some extent. Because everybody wants to print what? Including me. Everyone wants to print at least this part of a hedge right now. Sooner the better. But you can't do it without the right mix. Still have accumulation. And there ain't nobody printing your fucking hedges just because you're rolling, like you're hitting them. You need real money selling to go along with it. You need dealers to chase. And then we're wound up into this fucking OPEX, this quarterly OPEX. So here we go again, back up. Whoop. Again, back up again. And we all know that everybody wants this print. We all know that bears want this print minimum. And they want it now. They don't want this. They want this. And they want under it. And they don't care if you come up here, as long as you go back down here, right? Just more down. More down, more down, more down, more down. And it's not quite happening yet. And can you imagine this morning and the close yesterday, as we were heading to that close, I'm buying calls. I'm loading up yesterday. Buy for tomorrow. But let's look at what yesterday looked like. Yesterday, hell, it looked even worse than that. There wasn't even a green bar there. It was actually a red bar. Hold on, let me show you how bad it looked. Let me show you how bad the replay or the close actually looked yesterday. It looked like this. Don't tell me that didn't look like hell's bells yesterday. Don't fucking try telling me that didn't look bad. That looked like, hey, we're gonna get a fucking we're gonna get World War III in the overnight. Elevator down, right? That's what it looked like, didn't it? Don't tell me that didn't look like that. And yet we're not there, are we? We actually turned up. And so as we're in the bottom yesterday, you know, we're being whipsawed back and forth, right? And so it just reinforces where we actually are. We're in OPEX, we're in quarterly OPEX. You're going to expect outsized moves to the downside and upside. All else equal, you could even see some major highs in here. And while we are in this craziness, everyone's trying to find out, hey, what is the, you know, what's the quarterly OPEX? What's the month end? You know, is it 6,000 flat? Is it 605? Is it 610? Is it below 595? 5905 because of the collar? Everybody's got an idea of where it's going. But nobody really truly knows where it's going, do they? So what you do as a trader when you come into these big OPEXs is you sit on the edges. You like sit down here, sit up there, sit down there, sit up there, sit down there, up there, and you might not hit one, or you might not hit one of these, but you should be sitting up here to hedge for September, October print. Yeah, and if you get it on a war doom thing now or down here, great. Awesome. If you'd have to wait until late July, late October, all right, I'm still covered. But also you should be down here trying to buy shit, or at least watching it through into the first week of July. Because if we begin to break down now, early, that can be a hint that we're going to roll fucking right after the start of Q3. That is a possibility. But if you start to see, you know, this hold and that hold and this hold and that hold, and you start to see the market do this, you need to be able to take that trade up and to the right too. And nobody really knows the outcome here. You can have me spinning bullshit to you, anybody else. And, you know, there's no real crystal ball. There's so much going on that literally the gears and machining, the roll, the options market, what people tell you and then what they do is different. I told you all this yesterday, right? There's so much going on that no one truly knows. Your best bet is to sit on the outside edges here and get long if you can for small term trades. You're not trying to get long here for out in July or August. That's dangerous. You're mostly just watching the behavior and the downside. The real trade here is the hedge. Any high, you're building out your hedge. There is some intra-trading, but don't get stuck in the middle here either. You know, don't be like, hey, I'm going to catch this down here and I'm trying to trade that. I wouldn't be trading that. And twice now we've had that proof itself, haven't we? So you can see it right here, right? There's one. There's another one. Now that shit looked bearish as fuck. Both of them did. Can't say it didn't. And where are we at today? Up. All right, whip up, whip down, whip up, whip down. And now we've got a volatile event, don't we? We came in low on Vixperation instead of high. And if you get any kind of dovish Fed, you know. And as a matter of fact, the fact that we didn't come into the Fed meeting, the fact that we didn't come into the Fed meeting yesterday up here, what does that tell you? Dealers are leaving room for the upside move, isn't it? Now, if we get an upside banger today, they didn't give it to us yesterday to put a hedge on. They didn't give it to us on the open this morning to put a hedge on. If you can catch at any point on any of this volatility menu from the French Laundry, in the brief I gave you a French Laundry menu of vol, right? And if there's any moments where we trade higher, it's just another opportunity for you to hedge. So just like the bear that wanted to see this bloodbath yesterday in cash market or overnight, I want you to remember on a high that your job up there is to be looking to build out a hedge. So if there's any excitement at all, still from now into the end of the month and even into the first week or so, try to take that opportunity to pre-plan, hey, I'm going to put a hedge on. I didn't do it over here. I know that I've got 1, 2, 3, 4 tries at it. That there's 5 there, but normally in an OPEX you get like 1, 2. This one's a little low. 3. This would be a good one today. And you might have one more up into NFP. Like they run us up in NFP, everybody goes risk off, and then you can put one on then. You might more than likely have at least 4. And furthermore, let's say we get into the first week of July and we're bullish. Let's say we're going to do a breakout. There's one more chance here. If we come out here, we're like blooding it, and then let's just say we recover on the 7th and go up here. If we do, still take that opportunity to hedge, even if we're going to go up here and back down in September, October, take that opportunity to put a hedge on. Like putting a hedge on is a good thing to do. They feel good. There's reasons to hedge with the market. Now, I want to talk to you about that briefly. When you put a hedge on, in my experience, when I've had a hedge on, and we're not like rolling over yet, so we're like trading higher, I feel good. I feel more confident. Like, yeah, I got this trade going higher. I'm going to chase this up. What about the hedge that's burning? Well, it's got time on it. And not only that, it's pulled in, and if we start rolling, I can get more aggressive with my shorts, with my put spreads, my day 0 date puts, all that kind of stuff. But you like feel good chasing the upward price on a hedge, and you also know that you're going to make enough money that if the hedge does burn, you're still making money. And if you ever get caught in something, you know that your hedge is going to cover you. So hedging is a good thing. It impacts your mentality, your emotions, and all those things. Now, this doesn't apply to some people that have bought SPY at fucking $100 or something. They don't care. They're like, I just buy SPY, bro. I don't need a hedge. I agree with that. I don't sell options or anything. I just buy major lows. That makes sense to me. But for most people, they're taking profit, or they're in and out of the market once, twice a year, every couple of years, every bull run, whatever. Hedging is a good thing. So even today, if we end up blasting up to the moon, we have another opportunity, right? We have more volatility today. All else equal, the volatility can be good or bad. We have range expansion. So we're flat in range expansion. So just like yesterday into the close, I want you to think on the other side of it. If you get an upside move today, I want you to be thinking about, hey, maybe today, if it's boring at any point, I should go to like optionstrat.com or go inside the Discord and ask people, hey, how do I hedge? And what are you guys thinking? Search for Volatility Wiz. He posted a bunch of trades. Find the people in there that are hedging right now and say, when are you trying to execute this? Where are you trying to execute it? Time, price, what do you got? And it feels good. It helps you with confidence as a trader. It helps you with confidence as a seller, too. You're like, I know eventually this shit's going to print. And eventually I can get fucking violent with it. So just think about that hedge. And keep that on your mind. We're now trading 60105, I believe. Yeah, get on up there. Squeeze that motherfuckers out. Squeeze them all out. Squeeze all these assholes out. Yeah. There we go. There we go. Get back on it. Probably saw that fucking bull trade in your brief this morning and said, this guy's insane. I'm like, goddamn right. We're going up, baby. Hold on, I gotta check these fucking calls. I need more pump. I need more pump. I need more IV in my life. I need you to like stick an IV in my arm. Coming up now to the 4-hour gap here. This is where they sold us yesterday, by the way. It's 10:30. It's the same place they sold us yesterday. So if you're trying to get frisky with it, this is the same place, same bar as yesterday. Let me go check on the Discord really quick, see if they're alive in there. Oh, keep on going. Take all their fucking puts. You didn't do it yesterday. So you better be fucking doing it today. Murder the goddamn VIX. All right, now we got to talk about Jerome Powell. We got some chatting to do. In that brief, I had a big brief for you last night. It was beautiful. It was like gorgeous. It had everything. And I was like writing the brief last night. I left it up on my computer. I pressed the save button. And then early this morning, I got sidetracked. And when I got sidetracked, a box popped up and it said, you need to reauthorize. So I did. And then I went like, they reset everything. And I went back and nothing had been saved like I thought it, or I had saved it. Like wiped all my work. So I had to do a brief for you this morning that was not quite what I had for you. So I apologize. I was pretty angry about it. Did you guys see that bull? Did you guys see that bull thesis? Oh boy. Yeah, you see that? You see that? You see that chart? It's like showing why we should go here for there. The numbers matter. Some of you guys probably realize that the reason I drew it that far out was so you could see like Vixperation OPEX and our NFP, and then the last day of the month, all that kind of stuff. And it also showed one other thing, which was an unwind. There are those out there that want to see us unwind right now. And there are different ideas people have about what an unwind is. So are we unwinding to 5905 early to unwind even lower after month end? Or is the unwind only to 5905 after month end? So think ahead. If you have a bear thesis, you would want to see an unwind to 5905 right fucking now, wouldn't you? Right now. And maybe even today. So pay attention to those lower inflection points along the way. Are we unwinding 6,000 to 50905 early or after? Because there are those out there that want to see a 5905 right now and then keep us down into these rest of these events. And then we start unwind, a true unwind, and unravel. Into the beginning of July. And let me explain this to you simply. We're going to do this really simple. A lot to keep track of, isn't there? I want you to think about the inverse. You don't need much but a couple lines here. This is mid-February. We come into March OPEX, month end. Do we break out? Nope. And we're in seasonal weakness now, right? Can't unwind that trade. Down we go. Come back into March OPEX, quarterly OPEX. Were we able to break higher with conviction, with a back test and up and away? Nope. Can't. You can unwind it here, but you know the big unwind. The big unwind. You know the one the fucking bears want, right? On the inverse. So we can't unwind it. What do? Keep going down. We come into what? This OPEX. And we are able to do an unwind and then do the real big unwind, huh? So now let's look at where we are over here. And what do these bears want? I swear, these guys want what? They want an early unwind. Just like over here, right? They want under here, don't they? Matter of fact, the earlier the better. If they can get it down in here, see, just like this, right? You know, shank it. Down, blood. Reverse it. Same shit, right? It's right here. That's what you'd want to see to change major trend, wouldn't it? So I'm sure there's some people out there today that are kind of angry. Let's look and see what's happening. Not so fast, huh? And look at that. They took this right down into major trend yesterday. Whoop, and then they did it in after hours. Trapped all these sellers. And now they're all getting squeezed out again. And the clock is running out for sellers. Every day that passes that we don't break trend, every day that passes that we hold up, every day that we do this is another day that we don't unwind. And there it goes, up and 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 up, right? There's trend. Matter of fact, let's look at it a different way. You could even say that trend somewhere like right there, right? Let's look at it more closely. You know that 5905? Right here, isn't it? 5905, everybody's telling you we're going down there, right? It actually raises itself over time, doesn't it? This week, they're telling you 505, 5905. Next week, they're going to tell you, okay, now it's 5955, not 5950. Next week, they're going to tell you it's 6000, aren't they? And daily trigger is going to go higher. The gamma is going to go higher. They're not telling you that right now, are they? I know they're not. I know they're not telling you that. They're writing you shit in briefs, and everyone's like focused, right? 5905, 5905. Get it down here. Get it down here. Get it into some negative gamma early. Choke out the bulls. Change trend. That's not bearish, is it? You had War Doom yesterday. Whoop up. War Doom. If War Doom really was that bad, if we were trading War Doom, we would have broken down, wouldn't we have? Sell. Get underneath this for the rest of it. That's how you get a trend change. What's the plan? hedge highs, watch the bottoms. How many people are telling you crash right now? Everybody's scared. Everybody crashing. Let's look at this trend change over here. Big, beautiful trend, right? Look at that. Bet you that trend was even low. Oh, hold on. Bet you that trend was even bigger and beautiful, more beautiful, or wasn't it? Beautifuler. Right into an OpEx bloodbath. This was the 16th. That's 14th. Start hedging. 18th. Oof. Today is the 18th. Today is the 18th. Did we trade up into Vixperation today in OpEx? Nope. We traded down into it. So right now, what is happening? That ain't bearish. I was hoping for the trade up into Vixperation, sell it down here, and then hold this and go on. No break, no sellers, just better price. Oh, back to the perch of safety. Looks like people don't want it to sell just yet, do they? Didn't get 5905 yesterday, did we? Didn't get 5905 overnight last night, did we? You would think. Okay, so for today, we know that we've got Vixperation. We know that we didn't lose support overnight. We know that we didn't break major trend yet. As far as bottoms are concerned, everything looks intact for the continuous so far. Things can change. There's a window of movement. But so far, there is no break of trend. There's no break of major trend. There's no break of the trend from the bottom of the market. Not yet. We haven't broken below ICT, have we? Weekly and monthly, that's 590, 592. Happens to also be the place where if you look at net gamma, we go into really negative gamma. Not gamma flat, right? 6,000. Not neutral gamma, which is just below it. So we're not there yet. It's also where the daily trigger is. That hasn't been violated, hasn't been rejected. All of those things are together, right? So what is the plan for you right now? More than likely looking for highs to begin or open a hedge if you haven't already. And things look good. And we got tomorrow off. Do you want to see the trade that I'm still on, that was on yesterday and I'm still on today? This is going to make y'all feel crazy. Hey, look at that. I wonder if this morning you were looking at all this doom and gloom or the reversal and you were thinking it's going to crash. I bet a bunch of you were thinking that. Why am I looking at this over here, farther out in time? Well, you know, there's the 592, I guess. That could be worst case scenario. You kind of get us up into OPEX. Get me my what? OPEX target, right? Tag, right? Come back down, fail NFP. And maybe you can get some more down into where? You know, where Wall Street can buy a low, where we can price in some war doom, wrap it up into a nice little bow, present with a bow on it. We can move on for the summer trade. Oh boy. If we go up there, that's gonna piss off people. 605-ish. Oh man, that would make people angry. DivX is Thursday. Wednesday, Thursday. The day we're closed. God damn. We got to get that Rampo-Rama going, don't we? Whew. You want to place a hedge right now? You guys want it on 601? I think it's too low. I think it needs to be higher. I think it needs to be at like 605, 610. I'm serious. Unless your viewpoint is different than mine. I think the best hedge here is like 610-ish. Failure of 610, like 608. I can't recommend a hedge here. Slightly higher, more ups. If you were to put a hedge on, though, I'd be looking for something between. Let's go look at that right now. Let's do it together. This is a good day to do it together before we come into the before we get to FOMC. Good question. Let's look at it. Hang tighter. It's in the briefs, by the way. You can refer to a brief for it. You can refer to Twitter. What is this, a chart for ants? Hold on a second, boys and girls. Hold on a second. I'll put it back in the main. I'll look for you in the background. Hold on. I don't know where the fuck it is. Hold on, I'll find it. I've got a copy of it here. This is a copy of it. We are follow my cursor, we're right here. Now this is August 1st. And this is about midpoint. This includes the trading from 2019 and the trading from 2024. Now, I did the midpoint because this could extend. If we were to get a little bit of a bloodbath, try to price in war, it might push price out to like September, October. We could get bloodbath and we go to World War III now and it's earlier. So it could be earlier. But look at this weekly trigger right here. And in one instance in 2020 or 2019, we only came back to 6,000. In the 2024 instance, we went really high, didn't we? We had a spot up, vol up situation in 2024. In 2019, we grinded sideways and we didn't bloodbath as much. So there's some key takeaways here. If we do spot up, vol up, we should bring it back violently. If we have modest summer trade, that's where we grind up and sideways, the dip won't be too bad, theoretically. So I don't know the outcome, nor does anybody else. So what I would say is, if you're going to hedge right now, before we exit the window, the quarterly OPEX window, I would say try to get price as high as you possibly can. So anywhere of a failure, maybe 608 would be beautiful. It'd be fucking beautiful. 608.50. It'd be gorgeous. It's like that nice one moment high tick in the next week or two, or next 2 to 3 weeks, on a close or something, on an open, and you're ready to go. And why? Well, because we also know that the market is what? A bloodbath below 590, right? So you figure if you can take like a hedge and you want to take it at like 608.50, have most of your profit between 608 and let's call it 592. Maybe rein it in a little bit, 595, and then leave the ability to gain more money below that number. And where would that be? Maybe we get a wick to the weekly trigger. So if we're targeting 592, 590, maybe we can blast down to like 585 or even lower. So let's look at a different chart now. Not this one. I wish I had it in front of me, but I don't. I'll try to get this to you again. I got to dig it up. I don't know where the hell it is. But let's have a look-see. Here we are. Let's do a window. Let's say we bloodbath after the 1st of July. Let's say we start bloodbathing into July 31st. Let's say we price in war and then we start rocketing. We do some catch up. But we don't do the doom trade early. So we extend summer to September. Matter of fact, let's just put one more on it just in case. Now, I would say something to you in this. If you're looking for a print, the actual print, I would be number one looking for a print a week after. So if you get the 1st over here, be looking for like Monday the 7th. Or Friday. How about we got the Thursday and the 3rd. Let's do the 7th in this case. If you're looking for a print for 31st, make it just a few days later. Monday, Tuesday, Wednesday, Thursday, Friday. If we blast down into the 31st, woohoo, close it. if we blast down to here on the 31st, then you get one more leg down there. The following Friday, woo! I can show you examples of that happening. Like everybody's timing it for the 31st. The real leg comes down on the following week. All these options expire. Market frees up to go down and hit the real target down below. Same thing applies to September. That's a Tuesday. I'd make it September 5th. And I'd do one more over here for October. This is the 30th of Tuesday. Wednesday. I would do it for like Monday the 6th. Just for that extra little oomph. Can you imagine your spreads or whatever closing on a Friday at 4 p.m.? And you're like, there's more down, just a little bit more. And you didn't have an extra week on them to max that shit out? That'd be piss me off. Now, what else can we look at here? We got some targets. Somewhere in there. We also know about that funky little 5905, don't we? It really is real. I'm going to show you why it is. I'll show you why. If you're just new to the show, I'll explain why it matters. If you go to a monthly here, well, on SPX is a little bit higher. But you see this candle right here in SPY, it shows up better. It's like 592, 590, 590, this is SPX, but on SPY it's 590, 592. And this candle is critical. See that candle right there? And you can see that we went up, we went down, we went up, we went down, right, up, and then we blasted down on that candle. Same thing's happening right now. So if you come up, and if you come back down, that same candle's going to matter. If we roll under here, you know where we're going, right? We're going to a new low, aren't we? This is called what? A double correction. Up, down, up, down. There's your monthly trigger. We're now firmly in a bear market. Here's February. There are a lot of traders, whole hell of a lot of traders. Whole shit ton of traders. Whole lot of investors watching this. Why? Well, if we come up here, right? No matter what down this is, even if we don't go up here, even if we don't hit that, let's just say we hit this right here, 31st, right? Whole lot of traders want to see this move here, right? You get your Lowry Williams super ramp up here. Charlie McGilligot, if you've watched anything that he's said about the spot up, vol up trade, he's kind of fucking the bears too. His point is if you went spot up, vol up, you would get your, like, people want the crash early, right? Like down, double correction. Or, no, sorry, I get that wrong there. My cursor's not working. You know, some of you are like, I want this now, right? Double correction now. McGilligot's using very slick verbiage right now. He's saying if we do the spot up, you need this to crash. But when he says it, but he doesn't tell you, which is your crash and your double correction, though, saves the market. There's your 30%. Or saves his trade. The more you do the spot up, vol up, the less that's 10%. They want it down here. They want blood. They want 30 way down here. 4,200. Bulls literally want super ramp. There's February right there, right? You know what bulls want? Bulls want spot up, vol up. And then they want this big trade. Oh, wait, where's the end of year? December 30th? They want a breakout right there. And they want something like that. Bulls want like up, hit this for a correction, and then start cranking into February, March, and then they don't care if we've ruined everything. I want you to look at this for a minute. And then I want you to go back and look at 1928, 1929. Also the 1990s. We did, the late 90s, we did this. It was vicious. We just like cranked. And then they're exiting the market the whole way. The institutions. You're the bag holder up here. You can see big volume bars here, here, big volume bar here. They'll likely unload. They're an elephant, though. It takes them time to exit the market. Leave you the bag holder. So you've got like, you got perma bull, moon. You got, super doom bear that wants the big move down. It's probably somewhere in the middle. So how do we hedge this trade? Well, luckily we're coming into a season of what? We know that we're in, I'll show you this. Hold on here. These aren't exact, but there's some takeaways here. We're in the ass end of NASDAQ seasonality. Ass end of it. We're in the ass end of NASDAQ. We're in the front end of volatility. That is all else equal. If we have spot up, we get volatility up. If we start getting spot down, volatility will turn negative, right? Big violent moves down. That's what everybody wants. Big violent moves down. Right now we're in season of volatility. If we get spot up, volatility will chase and make spot go ramp, right? That's how you get spot up, vol up in the season of volatility. You also know if you get spot up, vol up in the season of volatility and the tails of that volatility, the down move should be violent. You also have the bond boys. And what do you hear in the news all the time right now? Bonds, bro. Bonds, 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 right? Treasury market, yields. So if you are looking for a role, you probably hear a lot of talk about yields. Probably reading stuff like that right now. Look, watch the yields, man. Watch the yields, dude. That's how you know we lost the market. It's because we're in the season of bonds, treasury market. So right here, we know something else, don't we? They're not exact. But we start like this season of weakness, usually in mid-February. If it starts early, it usually lasts to like April, or March 31st, April 31st. Some years will break out, but it all comes back. This year we got punished. Couldn't break out, so we were a little bit more bloodier for a little bit longer in the season, right? When's the next season? For Doom, twice a year. Springtime, in the fall. Why? Why? Cyclical, right? As a matter of fact, when all the way back when we invaded Iraq, we launched that attack. We actually launched the invasion when? Coming into seasonal weakness. They literally planned an invasion around our stock market. That's how gross this shit is. So we know what's happens here. Look at this. This is October. You can't see that. Hold on. Think cyclically. Here is July, October, November. Does an institution care when they buy? No, it's just a window. It's a fucking side of a barn. Well, if I can get a low in September 31st, sweet. If I can't get it till October, all right, fuck it, I'll wait. Can't get it till November, fuck it, I'll wait. What are they looking for a print from this stuff? I don't know. December 31st, January 1st, or excuse me, December 31st. Uh-oh, we didn't get a holiday rally. That's all right, I bought down here. That shit, I got that shit all the way out to Feb OpEx. Cranking. They finally hit their target. Woohoo, hedge. Downside. Let's start buying, baby. Upside. Let's start taking the money off, baby. Let's look for this time of year again. There's probably an institution here that's looking to get a print higher. They already caught their fucking print over here. Probably want to print from buying down here somewhere higher, either early or late. And they're probably looking for another dip buy. For when? For fucking December, February, January up here. Probably higher. Probably. Unless things start to devolve or get crazy. So if you're looking for a high right now, in this little zone in here, right, to hedge, probably want to get as high as you can, right? Now, the options market doesn't want to allow that to happen. So I think being reasonable here, SPX in particular right here, we already hit that one already, didn't we? Already hit it. That's 605. Nice round number. 610. Maybe we can't get above there just yet. We need all those options to expire, of course. Big giant green bar there. They're not going to pass that right now. But if I can catch a hedge, you know, somewhere near there, even if we can't break above it until after, just some like in there. You know, 1, 2, 3, 4. Do I care if we crash here? Nope. Do I care if we go up here and crash here? Nope. Do I care if we trade sideways and crash? Nope. Do I care if we grind and then crash over here? Nope. I just know that we're up here, like up here, and I'm looking for a certain place. Probably right here. Now, wouldn't it be juicier if we go lower? Yeah, it would. The big old gap to close down here, 75. Another gap down here, 64. Maybe you do like something where you're going to make a little bit of money down here. You're going to make a lot of money if we go any lower. You like trying to get that right there. Or you have unlimited winning if we keep going down. That's 5,400, 5,600. So maybe on a high, you got a spread maybe that's like, 6,100. I'd do 5,850. And then I'd maybe add some extra for the downside over here. Let's call it 5,600. 610, 5,600. Pretty good, right? 400 points. Start getting squeezed out. Oh my God, oh my God. And then, whoom. Money. Easy trade. You got your hedge on, you're day trading, you've got a spread on, you got, you know, whatever you got, call spread, you're making money that way. Boom. Getting paid the other end too. I'm a bull and I'm a bear. Now I'm a little pissy right now that we haven't hit. I'm a little stinky that we haven't hit just yet this high up here. But we got DivX, we got QuapX, we got all kinds of like, we got Fed shit. I'd really like to see that failure right in there. Like a failure right here. You know, send that shit down. Finally hit the 5905. Do a back test to make sure that the way is higher. You know, you got the way is not higher. Major inflection point. And you got something telling you that no, the way is higher. And you guys want to hit this today, right? And I'm like, fuck you, no, that ain't no fucking, that ain't it. These are like Chamath sellers. Real sellers right here. That fucking guy. Let me show you who that seller is. If you look at volume bars, that fucking seller right here, that was a huge volume day. That fucking seller right there, huge volume day. That fucking seller right there, huge fucking volume day. Huge volume day. So this asshole up here, that's where he is. That guy right there. So if that guy is up here, likely not right here. probably like in here somewhere. That asshole might be like right here. So I'd love to just go up there and tickle his ass a little bit. You know, a little tickle. Bam, big red bar down. And then I really want to see these buyers be like, no, bro, you're not that strong. Now, they might not be, but I'd really like to see it, because if these guys buy this shit up and they're like, nah, fuck you, bro, the way is that way, these guys will turn into sellers here. And they'll do another big-ass red bar over here. And they'll just unload. And eventually, when they're done unloading their bags and they've gotten every bag left or out, they've unloaded everything, only then, as Miguel Agat says, can the market crash. You need to wear these guys out. These guys are probably institutions. And they're probably got to hit them once, hit them again, hit them again. And maybe, just maybe, the buyers overrun the institutions, and the institutions, you'll get reports that say, the only people long right now are hedge funds and retailers. And of course, nobody to buy it. It's now they're choosing for when to not buy it back from you as the bag holder. So the retailers and all the other shitbirds, we start blasting down, and everybody's losing their fucking, margin, their houses and their kids and their wives and their dogs, and they're playing their records backwards. And Wells Fargo and JPM and GS win again. GS gets the brag. They've been in business for 180 years. But right now you're not the bag holder. So we gotta get you and I to be the bag holder somewhere up here. Not quite there yet. Because they're gonna unload on you like that again. Reload. Right? Retail back up again. And unload on you one more time. So we got to get up there. We got to get up there and have them unload on you. So I'd be looking for a spread and a high, 610 personally. Somewhere in there. I'd like to see like 610. If you can get a print down here, cool. You can get a print right here, cool. If we begin to break down, make even more money. It takes till we get over here. Meanwhile, you're trading up the whole entire way. Yeah, I think it's good. So here we go. Ready? Same sellers. Remember 10:30? Same action as yesterday. Same action. I showed it to you this morning. Yesterday's action. I put in a brief last night. I actually drew the arrows. Remember 600? This is the inflection point, right? It's 11:30. Yesterday we had buyers step in at 11:30. I don't know if they step in today. If you wanted to take a long here today, you'd probably want to see some productive trading, right? You'd want to see a prior high, impulse move up, right? See if we can move this higher a little bit more. Remember the prior high over here? Hold on. Start getting some bat wings going. Got a wing over here, right? Come down, try this, try this, try this. 1 p.m., sell it down. Try it again. Equal legs. Also known as equal legs, works up and down, by the way. We're going to put 12 o'clock. They're probably going to try that shit again. No trade here, by the way. You want to see this price action first get up, and then you can take that trade for that bit of it right there if you want. And then we get what? Sometimes, like, because we got funky like FOMC, they might lock. This is where your trap is, I think. They're gonna tell you we're going up there, and they're gonna trap your ass in. Now we got to talk about this too. I'm gonna check this really quick for you, okay? So we got 12:30. We got 1 p.m. We know that flows come in at 12, right? And 10 o'clock, 10:30 in the morning. Woof, up there. The flows at 10. By the way, a couple things here too. Why do we get these flows? I don't know if you know this, but some of you guys know this, but a lot of you guys don't. So this is other markets, right? Asia, London. Take the trade up. Check before we open the market. If it's going up, they'll take that trade. They get out and close their books for the day. They smoke a bunch of pot over in Europe. Woo, made money today, bro. I don't care. Right? And then you get some American traders. U.S. New York comes in, tries to sell it down, right? New York's going to try to sell it down again from 12 o'clock to 1:30-ish. So this is 11:30. We're going to make this yellow. Right over to about 1:30 in the afternoon, which just so happens to be what? FOMC, right? So you got traders of the plan. This is 1:30. Make these yellow right here. I guarantee your ass that there's a trader out there in New York or in a sweatshop, boiler room, looking to get down and put a hedge on somewhere in here. They already did it over here. Took a shot at it. They're going to do it again and try to take another shot at it to go down. Then we got 2 p.m. That is what? That's the trigger, right? We got some volatility. Now, there's something else to tell you about this. We have unrealized volatility and realized volatility. At 2 p.m., we get the written statement from the FOMC, right? The decision. At 2:30, we get another shot at volatility. Right? Right in there. We get we get the statement. We'll just write I don't know, ST like an STD. We'll do STD. You guys know what those are, right? maybe not the younger crowd. They don't have sex anymore. There's the statement. And then we get the presser, right? Depressor and the STD. We know kids are depressed these days. Depressor. And the STD. Now, particularly on this day, we've got Vixperation and we've got FOMC. And we've got a bunch of mechanics going on. We've got quarterly OPEX trade that's different. And then we've got dealers that are focusing on traders that are dealers that are focusing on that, and then dealers that are focusing on the trade today for FOMC. Right? And then you've got traders that are already trying to sell from 10 a.m. And on an intraday basis with this event coming up here, these assholes right here want paid before we ever get there. They don't care what the rate decision is. They don't care. This is called an unrealized volatility trade. And if we blast down, then you have realized volatility and they'll jump back in over here. So they're like right here and they're like right here. So what can we say about that? You're thinking it's going to go up into 12, 12.31. Hey, maybe we're going to go up here. Then we'll go down, Cappy. Well, for you, you should just be watching price action here. That's it. You shouldn't be taking that trade. If price goes higher, all right, then we can take it into 12, 12:30, 1 o'clock in the afternoon. But we're not there yet, are we? So I got this here for you, but you want to see what? The impulse trade go higher. That's not happening. And we know that we have an unrealized volatility trade in here, don't we? So if I was trying to sell and make money on an unrealized volatility trade on FOMC, I would come out at 10 a.m. and sell and want to break where? Underneath 6,000, right? Why? So we can reject, come back at 12 o'clock, and try to get some down over here, huh? Blood. Before we ever get to this over here. Matter of fact, I'd probably like to be out before 1:30. Right? The flows come in from 12 until 1:30. That's what they're trying to do right here. You see it? Where did they start? Buy, buy, buy. So if I was a buyer over there, all the way down here, I'd probably want to flip to become a buyer somewhere in here. I have a window that I can do it in. About 1:30. I don't know if it'll take that long to get there. I'd really like it to be sooner. I know I'm going to get some violence over there. And possibly last into there, right about there. Looks about right, somewhere in there. I'm going to try to shank this and shank that down right in there. Now, will they be successful? I don't know. I don't know if they'll be successful. Just look at all that beautiful. Oh, look at that. There's the low over here. They want this, don't they? They're not going to get it. I don't think. I don't think they get it until the end of the cycle. I'm not on that trade. They want it bad, though. See that down there? All that juice, all that gap to fill. Maybe they can get it down to 596, though. That'd be nice, right? Get a little bit of like Jerome releases the statement. All of a sudden, someone says something bad. We're down here into the close. Whew. Now it's 1, 2, and 3 down there. At least we know where it is. Only thing you're caring about is this right here. This is all you care about. Mark out a low. Now, do I think we're going to go up here? Nope. I just want to see if price gets up there. You see that action right there? That motherfucker doesn't want it going up there, does he? Are you long calls here? Nope. You're only watching this. There's a guy up here selling. And what you do is you take his stops. Then he panics. Ting. More buyers than sellers. We're off and running. There's a guy watching the show right now. He's like, sell. Fuck that guy. They tried to shake people out of Bitcoin yesterday, huh? They were trying to blood the fuck out of that stock. I got some cool stuff coming our way too. I haven't shown it yet. I'm not going to show it until after 4th of July. I was looking at some shit last night that was badass. I'm like, I can't wait to put this on the show. It's going to be so dope. All right, so I'm going to read some stuff to you. Thank you for watching the show. We're going to take a quick, not intermission, but I want to talk to you guys. If you're watching the show right now, if you're watching this show right now, I'm going to ask you to do me a favor. This show is free. I spent a lot of time with the research in this show. I show you guys on the free version of this. Some stuff late, but there's a lot to be gained from the show, I think. Even if it's just have a voice in the background. Show costs me a lot of money and time. Costs the community and moderators and admins and all that kind of stuff a lot of money and time and their effort to help with this to happen. So I'm going to ask you guys, if you can, no matter where you're watching, on a Discord, in a blog, if you're watching me on Truvo or Twitter, on Twitch, YouTube, wherever it is you're watching me, if you could do me a solid and try to post a link of the FOMC today, wherever you are, I'd appreciate it. I'd be grateful if you could do that for me. If you could hit the like button, I'd appreciate it. I normally don't ask for this stuff. I don't ask all day long or 10 times a day or even not even 5 times a week. We just hit a like button, subscribe if you could, become a member. We have memberships where you can just chat on YouTube and Twitch. I got a bunch of stuff to tell you here. Like, number one, YouTube's fucking around with people with ad blockers. Twitch does not. YouTube also has native delay that I can't mess with, but if you watch me elsewhere, it's real time. I pay a lot of money to make sure that this stream is within like seconds to you on the right platform. So if you want to watch me somewhere else, I understand. Like, figure out Twitch. Twitch is cool. You can like move the window. It's not like YouTube where it takes your old phone up and you can't like switch windows. You can actually pop the window out and do other things on your phone and just listen. We're here Monday through Friday. There are people that don't even trade with me. I just want to hear somebody talking to them all day long. Try to be here to talk with you guys all day long, be a voice for you. Things get crazy around here. You'll see me like lose trades, see me make money on trades. You'll see me get angry and happy and tell you my personal life and all that kind of stuff. I appreciate if you could like help like with the show today if you don't support us either through chat on Twitch or YouTube or by becoming a member. Just like, subscribe, or repost of a link to the stream. I'd appreciate it. What else? This is one of our biggest shows of the quarter. What else? What else? Whatever your socials are. Then the other thing, too, is we have a website. It's called tradethetrigger.com. I never say this stuff, but it's tell it today. Tradethetrigger.com. Got what I think is one of the best trading communities out there. We trade everything. We trade SPOOs. We trade SPY, SPX, ES, NQ, Qs. We trade crypto. We trade big tech, Mag 7. We trade currencies, metals, what else? Everything, literally. Vol, you name it. We got some great mentors. We got some great moderators. We got licensed guys there to help you out. And we trade round the clock Globex 24 hours a day. We focus on traditional charting, gamma, Elliott wave, ICT, triggers and velocity. We wrap it all up together like one layer over another layer over another layer, see where everybody is, and see who's on first, who's on second, who's on third. And we have a very welcoming community. It's not based in like politics or creed or origin or anything like that. What you look like, fat, skinny, man, woman, they, them, we don't care. We're here to make money. Selling options, buying stock, degenerate stuff if we make a lot of money doing rational investing and trading. We do some degen stuff too. Yeah. Well, we do spreads and we do, you name it, everything. We do everything. So if you're looking for something, we're probably it. What else? We try to make our money on long-term trades so that we can, once, twice a year. And then we do a little bit less risk or a little bit more risk on like monthlies or quarterlies or OPEX cycles and quarterly cycles. You guys might think I'm a permabull on public, but I'm not. I trade everything. What else? I think that's it. I think our base, we've got tools in our Discord. We've got a TradyTix Pro tool. It's like if you do TradyTix, you can have all that shit for cheap. I think we charge $28 for the Discord. You get access to TradyTix. You get access to Unusual Whales tools. You get access to Gamma bots, all pro tools. Then what else? We've got a bunch. We got triggers and Velo on our website that you can manipulate twice Dan Mag 7 and meme stocks and stuff. We got briefs that we put out for you. We do Elliott wave charts for everything on 1 hour frames, 4 hour daily and weekly frames. We also at every quarter, and if anything big time changes, we'll give you like far out outlooks on your favorite stocks and tickers and symbols or whatever. What else? I don't know. We do all that kind of cool shit. So if you're ever looking for a community and you're watching the show right now, sign up. You don't like it? Just be like I signed up for a month and I hate all of you guys. You're mean. I'm not mean, really. But if you're like looking specifically if you're looking to learn something, or if you're like, hey, I've been doing this for so long and I want to learn this, or if you're like just if you're a losing trader, you're like a new trader, just want to learn some easy rules, some easy tools. You want to simplify your life, make it easy. Join us. If you have something to add, join us. That's another thing too. We're kind of decentralized. There's no furu. It's not my thing. It's like our thing. It's been a community. We grew this community out of a bunch of friends that have been trading together for many years. And so if you want to join, you're more than welcome. If you don't want to, don't have to. If you like join for a month and you're like, I think it's $28. The other day I bought Cheez-Its and Cheese Whiz. Cost me $13. So 2 boxes of Cheez-Its and 2 cans of squeezed cheese. And if you don't like it, just yell at me. Be like, give me my money back, bro. And I'll give you your money back. I get it. Might not be for you. I know you guys spend a lot of money other places. So yeah, tradethetrigger.com. We don't do any sponsorships. I don't sell any bullshit. Like, you don't get like Ginsu knives, or I'm not like trying to sell you like a real estate course. No ads. I've got no like partnerships with anybody. I've got no like, hey, if I sell this to you from like so and so, get $5 or something. None of that bullshit. So there's no bullshit around here. So feel free to join us if you want. What else? We get stock traders. We get everything. Whatever you do, we got the guys doing it. And a really good bunch of people. They do entries and exits. We're not a call out service though, so we don't do that. But if we're like, hey, I'm entering this and I'm exiting that, you get it before and after. Never just some stupid fucking screenshot that's fake that you fucking edit after the fact, or you do both and you post the after effect bullshit. So I would just tell you here, long hair, short hair. This is the exact trade, that kind of stuff. You decide what you want to do. What else? Bucks Cheez-Its. Well, what's going on here? That guy's angry now. You know he's angry. He ain't happy. He's stinky pants. He mad. This guy mad right here. He mad right now. Yep, that's gone. Don't need that anymore. Just taking the stops right now. John Rambo. Rambo, you seller, you're not doing it, bro. Die, spy, die. We're doing the double bat wing over here. R1 right here. Squeeze them up, baby. Slap that ass, squeeze them. A little bit of bear rage right now. Look at that beautiful fucking 10-second chart. Just ram it up their asses right now. If you want to know my thesis here, we're going up today. I think we go up today, tomorrow when we're off. You're going to get Friday OPEX, and you're going to get your shit pushed in my view. In my view, at least. Oh, that's the other thing. You know, you get like furrows out there that'll tell you all 3 different outcomes, and they use slippery words. Not me. I'm wrong sometimes. I'm right sometimes. I'll never give you the slippery words. I'll be like, this is what can happen. This is what's possible to happen. This is what I think happens. I'll give you my conviction of what I do. And everybody else in this group does the same thing. They don't do this like slippery bullshit where, I don't know, the furrow comes back and says, oh, you didn't read this other part of what I wrote. You get actual like commitment from people. If you're looking for like, you know, a group of friends, group of traders, want to hang out in real life too, I'll meet up with you. We do meetups and all that kind of stuff. We hang out. We drink whip Grand Winkle together. I just took a guy out recently. What did I spend on you? I took a couple guys out. I think I spent how much dinner cost me and I took you out? $3,000 or something, $4,000 or something stupid like that. So, you know, put my money where my mouth is and take care of people. It's a holistic approach to life. Wife or I don't do the self-care part. I should do that more. But like self, wife, children, dogs, cats, friends, community. Those are my friends, really, truly. This is like a family This is a family office. Fuck yeah. Fuck yeah, we are. We drink like big time champagne, and then we'll drink like Rip Van Winkle and go to like fucking great restaurants and stuff, and good time. You're gonna make money, you gotta spend it. You'd be dead. What are you gonna do? Like wake up with ass cancer one day? Wake up with like never smoked a cigarette? Wake up with like lung cancer? I had a friend that was a woman, and she was like, oh, like body temple, like dropped dead of ass cancer, like 35 years old. Never enjoyed anything in life. I'm like, I'm never gonna make that mistake. Definitely one life. I think we'd try to. You know what I mean? Like try to like fucking live a good life. So, all right, I'm gonna read some stuff to you now. If you're at home watching, I want you to know like this is all free, right? So I'm gonna read for you news from the wire, news from a Bloomberg. Oh, we got Bloomberg terminal shit. If you don't know, we have a member here who has got a Bloomberg terminal, and he drops dime on Bloomberg terminal all the time. You guys know him, right? Said he drops. We got Bloomberg terminal access in our Discord. We get all kinds of stupid shit. We get the white papers like on point. We get everything. So. Oh yeah, no. I'm not. I got cat. I'm not that guy. Like, I'm not trying to like. You like your parents try to spend your inheritance. Not me. Let the kids live. Let the kids fight the fucking power. I don't want them to be fucking renters like all these these fucking like to try like all these fucking PEs and VCs trying to make everybody a renter. Fuck those guys. I'm here to take all the fucking money out of all the fat old white men's pockets legally in the stock market. Not all of it, just a little bit. Just enough that they don't want. They don't catch us as retailers. Okay, so I'm gonna read some of this stuff to you, and we're gonna try to get through this. Goldman's Pravorsky. Today's focus is on the Fed. Oh, before we even get into this, if you don't know what my positioning is on this stuff today, you should get a slightly more hawkish Fed. SEP might help you though. Just in little small verbiage changes. I am wondering if the Fed is going to try to not focus on the negative. There is some negative out there. One, of course, is geopolitical. Two is we don't have any real fucking deals on tariffs. That's a problem. No matter what Trump's saying, you gotta have a deal or two. Even though Wall Street is pushing a narrative right now, I know that Wall Street's pushing a narrative to you that it's all tails and stuff at this point, and there's less vol. I agree with that to some extent, but still, you want to see progress, real progress. I think that's a little underpriced in. There's another thing that's Wall Street's not telling you, the street's not telling you. They already know, and I just read every fucking bank's white paper. I went through all of them. And they're I think they're not telling you because they don't want you to know. But I want you to know that there is, even without the war shit, go find Wolf Richter. He did a piece on PCE. And that shit's going to come slingshotting back. I promise you. Next fucking 2 months, you're going to get a hot ass read on PCE. Now, does that make a trend? No. It's not negative in the long term. Everything is contextual. When you guys are consuming shit on like FinTwit and stuff, what they do, what FinTwitters will do, or what people that know better do, is they try to sell sizzle. They don't give you the context over 3 months or a year or 5 years. You're just looking at a snapshot. But there is some risk here with PCE moving forward. Mark that on your calendars. So I think that should be addressed, but it's not going to be more than likely. I think there is a monkey wrench with this bullshit with the Mideast. I'm sorry, there is. We really need to tail that kind of shit. I think that's an issue. So I think those are probably the three main things that I'm looking at right now. And so I think you might get slightly less dovish speech from Jerome. Not necessarily hawkish, but not an increase in dovishness. I don't think you're getting a rate cut or a rate hike today. I think they are using a carrot for rate cuts. I've told you that in the past. I've even told you in the past that you might get a rate increase. And there's some speak about that right now. Right now, I don't see anything. I think they might redo the dot plot. I'm agreeing with Wall Street on that. You got 2 cuts expected in the fall. That could be hawkish today. 1 cut now. But I'll be honest with you. Like a 25 BPS cut or a 50 BPS cut, not so bad. But for some reason, people think that cuts are good. They're not. We all know that we're going to get cuts eventually too. So it could be a little bit of left or rear view mirror anyways. As time passes, we know that cuts are eventually coming sooner. That's the opposite side of that argument too, that the market looks through this stuff. And you don't want lots of cuts. When we have lots of cuts, it normally comes in a major bottom. So that's why you're going to see possibly, hey, we're pushing cuts off. The longer we push cuts off, even if you get a negative knee-jerk reaction, it's better for the market. The longer that we don't get like cuts, better. If they dangle them in front of you to make the market go higher, that's good. The longer they keep rates up means they're doing a good job. There's some people out there that are saying we're in recession risk. That's false. There is risk out there with geopolitics, with tariffs, but the data does not support that right now. As a matter of fact, even if you get a hot print on PCE or CPI in the next couple months, the consumer is well off still. They've absorbed a lot of this well. Matter of fact, they can even absorb some inflation that is sticky or persistent. If we get one more round of that sticky, persistent inflation, the second round they probably won't. And that's when you'll get the idea comes into play that one more round of inflation is okay. Like the second and third round, that's when you'll get consumers saying, fuck this, I ain't buying this. And that's when the economy begins to slow down. And then comes unemployment, right? The other thing is another one is unemployment. 4.2%, it's been like that for 11 months, hasn't it? So unless we see velocity in those things, like velocity in inflation, velocity in unemployment, markets in a good place. So the Fed does not have to cut. Make sense? And the longer that you don't cut, the longer the bull market lasts. I also want you to think about the deficit. More deficit, more bull market. When you hear people say, I want to cut the deficit or I want to cut the debt, those are bears. They also want to destroy the stock market. So if you're a bull and you're like, I want to, rein in the debt and rein in the deficit, you can't be both. Make sense? What else? We're still good here. What else? On rate decision today. There's a couple other things you need to know about the rate decision. These are my rules. They're tried and true. We have the dealers will price in just the decision, okay? So it's better for you to sit on a high or a low and take a trade. So you're on the top or the bottom. You're either selling from the top or you're a buyer from the bottom. These events are meant to take all your money. They juice the chain for today's options. What does that mean? That means if you're looking for a target up and down, oftentimes we will fail those targets. Just before we get there, dealers will buy or sell. They'll burn that option and they'll reprice as the rest of the day moves on. So they're juicing early, failing targets, and then they're repricing options even if we go in the direction of the trade that you were in. Single options are very dangerous. You can make shit tons of money. I would say this to you. If you're going to take one of those type of trades, and let's say they cost 50 cents because they're juicing them, or $1, and you see your option going to 10 or 30 cents, you should be only taking that trade if you're willing to lose it all. So you diamond hand it until it does print. If you got 50-cent option goes to 10 cents, you diamond hand that shit right to the bell. Seriously. Don't get caught up in, out, in, out. Here's the other part. Always have directional stops. So if you're bearish and you're we're going to the depths of hell, you're the option costs you $1. Just be I want $2. Make sense? Not the upside stop, the downside stop on the downside trade. If you're a bull and you're I got a 50-cent call, put an upside stop, take $1. Do not hindsight trade. Don't be oh, it went to $3, bro. I could have timed that perfectly. Take your money and run. If you don't like that trade style of trading on a day like today, which I don't recommend, that degen style of trading, look for highs and lows to get long, or for continuation sells, or for putting on a hedge right now. Also, you can beat some of this IV crush and option interest crush after today or into the end of the day by trading spreads or putting more time on the trade. So if you get a big old high up there, you buy some puts, put some time on them, put them on a spread. Even if we squeeze up higher, you might get the roll in a day or two. right? So think a little bit farther out in time. What else? These events are built to take all your money. So if you're going to put a trade on, if you're in our community in the Discord, ask someone. This is my plan for today. Don't feel bad if somebody yells at you. Somebody's like, okay, what's your plan? What's your thesis and how are you going to execute it? Where's your stops? Where's your money? Take the money. Where are you going to DCA if it goes lower? Where are your inflection points? And if they say, you're fucking regarded, don't do that. Don't be like, oh, I'm going to take my toys and put them away and go home. And if you were right and that guy was wrong, it doesn't fucking matter. We're back to hindsight trading. If you took that trade 10 times and they beat that trade up on you, they say, oh, you only win this 3 out of 10, don't take the trade. I'm here to make money consistently. And for most of you out there, you're likely going to lose today. So there are so many better days, so many better setups, especially when we're not in OPEX or Vixperation or quarterly OPEX. And especially right now, if I was me, like I'm doing right now, I'm looking for a high to hedge. I'm using today as that vehicle. Make sense? So if you're like looking for that, I think that's probably the best trade today. If you don't get the high, okay, you wait until your next opportunity. You know what I mean? You're like looking for opportunities. You're thinking this through. You're bouncing it off other people. You're asking them what they think. And you're likely going to find people that are stock buyers, option sellers, right? And there's always someone on the other side of every trade, right? We got a big-ass bar at 6,000. We got another big-ass bar at 6,100, right? We got another big-ass bar at 5,905. Someone wants to sell you those options. Someone wants them to expire worthless. So think about that kind of stuff. We also have option gamma coming off as we head into the end of the quarter. Like, think about the opposite side of any trade you're going to take today. So I'm going to read a bunch of stuff to you now. And then I'm going to put the news squawker on as we get closer to the 2 o'clock hour. But if any of you out there don't have access or you're poor, don't pay for things, I'm going to share some of this with you. GS. The rise of geopolitical notwithstanding, we believe hedge funds are becoming more optimistic on the equity market into second half of 2025, having net bought global equities for 6 consecutive weeks, driven by long buying. We noticed it yesterday, didn't we? We noticed it the day before. In addition, activity in single stocks on both gross and net basis has far outpaced macro products in the past month. This is particularly evident in U.S. equities, which shows increased appetite to hold idiosyncratic risk. That being said, the pace of buying has slowed in recent sessions. Shocker. Interesting. We all know this already, don't we? You're a member of our community. We took our money and ran, didn't we? We hit 605 and we got out. What is our community doing? We're hedging the highs and watching the lows for inflection points to take a low to get long for a summer trade. That's not shocker. And they're telling you this today. They should have told you this like 2 fucking weeks ago. Of course, it's a little bit late, isn't it? That being said, the pace of buying has slowed in recent sessions. You can also see this where? Where can you see that? And the skew, right? Put skew is showing it too, right? On a daily basis, there's a little bit of good call skew, but the put skew is also showing as a pause in buying right now. It's an inflection. We're in a moment in quarterly OPEX. We don't know if we're going to change major trend just yet, do we? And fundamental long-short net exposure, while up notably versus April lows, is still below the level seen in early Q1, suggesting hedge funds have not gone in or not gone all in. They're likely looking for a fucking low. Huh. Well, bro, I'm gonna buy 5905. I'm gonna buy 600, and maybe if we ever get there in some more doom, I'll buy 550, 575 or 565. That's my plan, bro. I got a hedge on. That's really what Wall Street's doing. They're patient. They're very fucking patient. You guys are chasing like burning fires, hair on fire. These guys are calm, cool, collected. And you guys are getting better at it, though. I read some of the data, and I want to tell you, if it is a retail trader, you guys are getting to be badasses. And they hate right now. Hate that you're not the bag holder right now. And I applaud you for that as a retail trader. Things are changing. Retail is getting on the same side of trades right now. We are starting to compete with hedge funds, the street, family offices, and that's good. And they're going to ramp up and amp up trying to fake you out as much as they can. You noticed it this week, right? Right down into a close, right in after hours, like fucking right at the top, right in after hours, right? One day where you hit your target. You have to literally be watching the markets like they are every fucking day. Quick, quick, quick. Then you've got what? High frequency traders, retailers, and I'll get into that. They're trading 10-second bars in just a 2-3 minute move, right? You got a lot going on. Big volume, no volume. Big volume, no volume. Everything is working against you as a retailer right now. More broadly, across the institutional space, measures such as GS Research's sentiment indicator, risk appetite indicator, and single stock put call skew also point to light to neutral U.S. equity positioning. Makes sense, in line with what we're doing. While all major regions have seen increased gross trading activity and net buying in the last 6 weeks, the U.S. is vividly on display as hedge funds have recently allocated far more risk towards U.S. stocks. Whew. Which in money terms made up less or greater than 70% of the increase in global gross flow and more than 80% of the global net buying on the prime book since the start of May. Money flows coming back into the U.S. FinTwit tells you it isn't. Within the hedge fund universe, the pace of risk-taking in Europe has been a relatively laggard versus other regions year to date based on our data. And net flows within Asia have diverged by market so far in June. Buying in Japan, Taiwan, and Korea versus selling in offshore Chinese stocks. What's topical in the U.S.? AI optimism is back. 71% of our latest positioning and sentiment poll respondents are either slightly bullish or bullish on Gen AI. However, bullish sentiment does not equate to full positioning, as net exposure in mega cap tech stocks and LS ratio of our TMT AI basket constituents both remain well below their respective peak levels. Healthcare is by far the most notionally net bought sector since May. It's healthcare, and it's also new construction ETFs. I don't think they say that here, but also note too is if everybody's on the same side of the boat, there should be some opportunity to buy in lows, right? So if everybody's net long equities, everybody's boats on one side, there may be opportunities for you to not go with everybody and wait for what? Some kind of a bloodbath, right? If you guys ever watch GEX models, right? You see like everybody's long calls and the expectation is that ticker XYZ is going to print from $200 to $300. Everyone's on the wrong side of the boat. Bottom side of the curve is where you should be buying, right? Like, nope, I'm going to wait. I'm going to buy the bottom curve, right? And underneath the surface, managers appear to have rotated into biotech coming into season and out of pharmaceuticals. Hedge funds are bullish on U.S. energy stocks coming into season, and OW, the sector for the first time in more than 5 years. Consumer discretionary is among the most net sold sectors so far in June. It remains by far the most net sold sector year to date. I think we're starting utilities right now. The recent net selling has been led by consumer services and specialty retail stocks. JPM says investors seem to want to buy the dip, especially after we learned investor sentiment leverage. And grosses are at near multi-year highs while aggregate positioning is neutral, meaning that we are likely to rip markets higher until positioning gets stretched, and nobody wants to be left. Read that to you again. Investors seems to want to buy the dip, especially after we learn investor sentiment leverage and grosses are at near multi-year highs while aggregate positioning is neutral, meaning that we are likely to rip the markets higher. JPM goes on to talk about some negative. And if you want to see some negative, it's probably in the dollar, probably in yields. You're looking for a reason, maybe a little bit of unwind in Japan. If you're looking for like a dip or something, They should present themselves. You got more time. You got a 3-week window. It started this week, and it lasts into possibly first week of July, maybe a little bit deeper if we start getting a little bit too low. JPM, with the chatter of the U.S. getting involved in the Israeli-Iranian conflict, we saw the risk-off moves that many expected on Monday. Oil up, bond yields down, U.S. bid, and stocks seeing supply. But we didn't see price, did we? We didn't fucking see price. So this is a scam statement by JPM. They're telling you that you're seeing risk-off in equities. You're not. They're stepping in and buying. Yesterday, if we were really trading warfare, yesterday, we would have fucking went down. We went down a few dollars yesterday. The low yesterday was like 600 to like 596 or 98 or something. You guys know what you guys want. We ain't getting it our way right now. Many clients' conversations point to the demolition of the underground uranium enrichment facility being the last major milestone. If true, it is unclear if U.S. involvement would last beyond this type of strike. Question is how long this lasts. The combined moves from Friday and Tuesday are what we had in mind when we shifted our view to cautious from tactically bullish. That's a crock of shit. JPM wants to trade 5905 at least between now and early July. Fucking liars, man. These fucking guys, they don't fucking stop. Like, shit you not. Like, we're literally still on trend. They wanted more, trust me. If this situation is agitated quickly, then think equities resume their march higher with all-time highs the target. Should signs the market expectations point to this situation persisting into July, then that would require a rethink. Until then, we like buying the dip. I disagree. I think you're hedging here. You're watching the inflection on the dip. Let them buy. And then as we get closer to the window, you look for an inflection point to get long. I think you can hit 5905. Maybe it is 6,000. But somewhere in there, you should be able to get a brief moment. Like big swoop down, nice fucking, wick down there. You want to like back test and confirm that we're going to go to all-time highs, or we're going to test all that fucking selling up there that I showed you earlier. I think you might get a shot at it. I don't know when. Nobody does. But we'll look for it. Note that we're still inside of this downtrend, and they're going to try to come in and try to sell us again here. At 12:30, they're going to take another swat at it up here. JPM goes on to say, at the conclusion of next week's, this is today, FOMC meeting, we expect a unanimous decision to leave rates unchanged and look for only cosmetic changes to the post-meeting statement. I agree. The committee economic forecasts will incorporate the trade developments since the March forecast round. Note, I gave you a reaction function to the SEP because that's today too, because the quarterly FOMC meeting. In your brief last night, I don't think anybody has that. I got that. I posted it for you. So if you're looking for any kind of like SEP stuff, hawkish, dovish tone, I did put it in the brief last night. We expect a unanimous decision to leave rates unchanged and look for only cosmetic changes to the post-meeting statement. That means we're pricing that in right now. The committee economic forecast will incorporate the trade developments since the March forecast round, which will likely push the growth and inflation outlooks in a stagflationary direction. I also want to let you know, if you're a pro trader, if you go inside of the documents channel in the Discord, I have all the white papers in there. So they've got a bunch of reactions in the presser. You can print those out at home, post them up. If you look, I've got a paper that shows like, look for these questions and these answers. This is hawkish, this is dovish, that kind of stuff. So if you ever want to take some time today and read some shit, I posted it in there where Dr. CS posts his badass shit. So you can like open them up, print them out, whatever you want to do. Before getting to the revised median view in the neutral of 3.8% by 2027 in the press conference, we, Feroli and team, look for Chair Powell to emphasize the primacy of stable long-term inflation expectations to achieve its dual mandate. No FOMC official has been advocating for a change in policy. so the decision to hold should be easy. The statement is likely to continue to characterize labor markets conditions as solid. I agree. And inflation as somewhat elevated. I agree. The May statement's description of uncertainties increasing further will likely be changed to remains high. That means more hawkish. And I agree with that. And I think you're fine in unemployment right now, but I would be afraid if Jerome says we might see some shocks to inflation in the coming 2 readings. If he says anything like that, that's bad. If we price it in now, though, fuck it. We won't have to price it in later. If he doesn't mention it, that is an edge for you as a trader. If he doesn't mention that shit, right, you fucking sell the fuck out of the next 2 PCEs. And similar changes should occur in the last statements mentioned about the risks having risen. The forward guidance about the extent and timing of additional adjustments has been unchanged since this year, and we expect that will remain the case after the next week's meeting. As of now, we doubt the Mid-East warrants a mention. See that? They don't want to mention that Mid-East. If you hear that shit today, that's bad. And I think that's under priced in at this moment. What else do we have here? What else do I have for you here? Let's see what else I can read to you. Platinum's still cranking. Good job, Platinum. Gold positioning remains low. That does look bullish for tariffs, right? Leaving a rear view mirroring tariffs. Coming to right tail on tariffs. That's good. It's also good for warfare. Warfare. What else do we got for you guys? Fed to discuss capital rule that has constrained trading in the U.S. Treasury market. The Federal Reserve says it will hold a meeting June 25th. Mark that on your calendars. June 25th. More volatility to add to the Grecian French Laundry menu of volatility. Mark this on your calendars. Fed to discuss capital rule that has constrained trading in the U.S. Treasury market. The Federal Reserve says it will hold a meeting June 25th to discuss changes to a capital rule that has served as a constraint on banks trading in the $29 trillion Treasury market. What else do I have here? What the fuck is this? I'll post this for any of the bears inside the community. Add this to your, the war trade that I've been talking to you about in briefs. Been like expanding upon a war trade. I'll post this for you. You can add that as an addendum to the war trade. If this, then that. Conditional probabilities. I think that's all I see right now. I'm going to turn the news squawker on. It's 12:25. If you're just joining us for the first time, what I'm going to do here today is I'll have charts up for the dollar 10-year yield, SPY. I'll have some targets for you as we enter the 2 p.m. hour for the release, the rate decision release, and the SEP. I'll have the new Squawker on as well. And I will also have Jerome Powell's press conference live on this show for you to watch. And we'll do like a reaction thing. I also want you to know that the market will be closed tomorrow for Juneteenth. If you're an African American or a black person, however you identify or whatever, I love you guys. And you guys have been through fucking hell. If you're out there and you're that person, you're watching this show. I live in Detroit, Michigan, right in the city. And most of my in real life friends here are African American, black. And so I hope that you're able to take time tomorrow with your family, your friends, wherever you may be, and celebrate however you do celebrate. I will be celebrating with my friends here in Detroit. It's a fucking blast. We have a good time. If you're out there and you get to get the day off tomorrow, I hope you get to spend it with your family and friends. Like Detroit goes off on Juneteenth. They like start partying on Monday. And it doesn't end until Sunday. And so if you're celebrating Juneteenth, all my love to you out there. What else? And I hope you get your day tomorrow. Get a good day. Get some barbecuing in. Whatever it is you do. Matter of fact, for Father's Day this weekend, I went out with some people and we barbecued and we went to river rafting and shit. My friends. So if you're out there watching this show, all the power to you. What else? What else I got here? I think that's it for right now. I'm going to take a quick break. So hang with us. Take a break if you want. If you're in the downside trade, you can see I marked it out right here. This is an unrealized volatility trade. We get the bat wing here. Another bat wing, downside target. Probably 597.80 down there, something like that. Failure to start up here for the bulls. Market's going to get parked and likely to the downside. And these guys are going to try to get out of here until right before this thing. Right? Get a nice little trade. Bring it right back up. And dealers will bring it right back up for an up-down trade. See it right there. Put it right there for you. If at any point you begin to see the markets at any point today run away, up or down, be wary of it. And I don't mean like down here. Not this trade. If you begin to see like the market just run away, chase it. If you see the market begin to like trade, like you get a hit down here and it starts to like run, you can chase that too.
And enemy positions will be an option.
This is all just unrealized volatility in here. Cool? Yeah. All right. What else I got for you guys? I think that's it. I think that's everything at this point. I think I got everything. All right. Give me like 15 minutes, 20 minutes. I'm going to go outside and like blow a line of cocaine and change my shitty diaper. Sorry. And what else? We'll prime the pump over here. I'll be back with you guys in a minute. Yeah, I got to shake off all the I gotta shake off followers. That's why I do the cocaine thing. Less followers, the better. Gotta trim the community down a little bit. Keep it reasonable. Otherwise, it'd be like Meet Kevin. Fucking, you know. Let me take a quick look with you guys. Let's take a look at this thing really quick. Just look for that down there. That down there. See, you guys. Hey, watch this, guys. So just down there's a big block of buyers down here. I'm pretty much where we need to be. Let's go to the 4 hour. Really. Let's do this together. Just like middle of the day. Look at a 4 hour basis. As a matter of fact, stay with me here, guys. What we're gonna do is we're gonna do this together. Okay. Can I get rid of that really quick? Get rid of that. Get rid of that. What is that? Oh, that's the pivot point. Get rid of this. That's a 4 hour bar. That's still valid. Let's look at this. Get rid of that. That 4 hour bar is still valid. Just look down here and see what we got. Four-hour bar right there. That's value down here. 595 is value. Wait a minute. Wait a minute. Our bar right there. I got this green one down, and we're gonna get rid of it though. We're gonna do an hourly bar right here. Another one right there. We already have it marked out down here. There's a 4. There's a 1. These are all targets for today, by the way. So some downside targets. You want some downside targets intraday? You ready? There's another one down here. I'll give you some downside PTs. 596.84, 597.71, 597.97, 598.95. So I want you to look at this with me. We can go all the way down here and still be on uptrend, okay? I know you don't believe that, but if we have an hourly trend, I want you to know that we can go literally like bloodbath this and up there, okay? All these are still good up here. I want you to watch this with me over here too. If we begin to lose on a bad, so you got unrealized vol and realized vol, right? This is all unrealized vol. If you get some real bad hawkish shit and they're going to realize some volatility, party time. 590, 592, 594, 593.
Just a reminder, 12:40 p.m. Eastern Time, bank account is Macklem.
You know,
Is in
unrealized volatility, realized volatility, after hours. Whoop. So if you're looking for a low to put on a trade or an inflection point, that's where it is. We got them all. You want to take a snip of that? You can. Snip it if you want. This is still bullish intraday. This is not. We know that the trade to the upside lives above 6,000, right? 6,600. Currently, on an hourly basis, we have a reversal candle here. So they're trying to, you see it an hour higher frame, scaling out a little bit. Trying to get us as far down as they possibly can before we get to what? Before we get to the event, right? There's no trader that wants to be short. The short is over, either time or price, one or the other. If they're going to get short again, they're going to jump in after. Okay? So they got a time frame here.
We have posted out the video of where Macklem is due to speak at the press conference on the feed for you to watch.
So if you were a trader, a day trader, and the news is good or we look past it, you'd be looking for some kind of blood down here to get long, right? If you had some good news into the close and you want to put a short on, where would it be? Up here, right? Watch out for these inflection points as well. Let's say we did it like this. You know, fade, 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 right? Sideways on the hourly trigger. Right? Quick move down, quick move up. You got places where it's going to fail too, right? Fail, fail, fail. You do spreads. You want to see it? That's where it is. You can snip that if you want. We're pretty well marked out here, I think. I think we got this. I bet you if you were to look at expected moves today, I got it pretty close. Remember that the sellers will leave as we get closer to 130. They'll wrap it up either price or time. Well, it gives you like a range too. Like, there are other traders watching this stuff too, right? So why am I drawing this out for you today too? It's not just for the day traders. You know what? You know why else we're doing this, right? You got like a guy doing a condor down here and a condor, or you got a guy doing a fly, right? So your condor traders are
seeing shares of Intel up 3.3%.
Your fly traders are up here. Condor traders are in here, right? Straddles and strangles, right? So it's not just you. You know, it's not just like degens. You've also got option sellers, right? They're like, oh, I'm going to sell a bunch of fucking doom shit down here, or not even down there. They're like, there ain't shit going on today, bro. I'm going to sell a bunch of fucking puts down here for the close. Or I'm going to sell a bunch of puts for Friday, and I don't give a fuck if we go down here because by Friday close, we're coming back up again. There's like a bunch of different traders with different plans. So if you're watching me do this, there's like smarter traders that are like, I'm going to sell a bunch of fucking sucker calls. You know, this guy's telling us we're going all the way up here into the bell and here on Friday. You know, so I'm going to sell them a bunch of sucker calls, you know, sell a bunch of 603s, 604s, 605s for today. I'm going to sell a bunch of 608s or whatever for Friday, or 610s. If there are any buyers. I don't know if there's any bid on these things, but. And today everything is juiced, right? You got puts juiced, calls juiced. Right? So I sell you a call for Friday. Let's just say a call for Friday today costs, I don't know, fucking, just pretend it's $1. You know, so the calls start ramping, or they're $1, but by the time we're out of this, they're like 50 cents, even though we're going up. So then they get out of that trade and roll it, and they just scoop up the 50 cents. They don't care. If we go down, all the better. They make even more money. It's like today, like options are juiced, both sides. So there's like vol traders that are even price agnostic. They don't even care if we go up. They just know that along, like you got like $1 call, let's say for Friday. It's just say, I know they're not $1. Let's say they're $10. We'll amplify. They're fucking $10, right? And you're directionally going in that direction, but they're hammering you down. Now they're $9. Going up, right? Now they're $8. Who's keeping that $2? Dealers and fucking the seller.
With Macklem.
Bam, right? Now sell it back down. Now they're $7.
He hasn't started speaking yet, but the video is there.
We gap up overnight, but they reprice them anyways with Theta and Event being gone, and IV and OI. Now they're fucking $6. This fucking guy sold you a call. Made $6 or $4, risk free. Closes the position. Fucking go $10, goes down to fucking 0. Ching, all the better. There's like a bunch of different people here watching the show with different ideas.
According to Al Arabiya, they say the maritime agencies advise ships to avoid Iranian waters.
Ching. There's a vol trader out there today that's like, bunch of suckers buying options. I got them. What do you want? You want calls? You want puts? What do you guys got, BCE? Are they
Macklem says we are watching mortgage delinquencies closely, but we're less concerned than we were a year ago.
Isn't that you know who does that shit is North Korea, right? BCE. Like North Korea, no matter what's going on, they're like, you know, commence fucking this and that. They're always in the sidelines pulling some shit. It's like a bad comedy. Well, we got Iran stuff. We got to do our own thing. Well, you can do them in the money. You don't need to be selling them outside the money calls. Like you can do an in the money call that's juiced for Friday. You can do deep in the money. They're going to reprice all this shit. I guarantee it. No matter where the fuck we're going, up, down, they don't care. If you don't know what I'm talking about, just watch the option chain. Watch both sides. Pick like a put deep, do a deep in the money put and call. Not too deep, but like, matter of fact, just do an in the money put and call. Watch it. No matter where we go, watch that each side and see. If you guys, so, all right, so if you guys pay attention to Volatility Wiz, inside our Discord, his name is VOL WIZ. Go to the search bar and type in. Click or left click and search. A menu will come down that says from. Click on that, and then type in VOL WIZ. It's going to show you all his post history. He's been sitting in our Discord for like 2 weeks, and he's doing calendar spreads for different dates. And he's like, do I care where the fuck we're going? Hell no. I just know there's going to be money juicing options. He's like, we're going to open this trade right now. He's like, this fucking thing costs 10 cents. By the time we get to this date, it's going to be costing $1 or 50 cents. He's like, then I'm going to close that shit before we ever get to the decision. I'm going to take my 30, 40 cents and bounce. Like, these guys don't give a fuck. They're not even directional traders. Like, they win no matter what. They're price agnostic. That's how you win. I'm serious. And we're in vol. Like, this is like when vol traders come out. They do the fucking walk. They do the pimp walk. Like, what options you want, bro? We're juicing. All right, I'll be right back. I'm going to just walk some of this off for a minute here.
So just get reports here on X, not confirmed, that heavy US jet activity after unusual Iranian missile launch over Iraq and Syria. They also say that the Brits are also airborne. Again, not confirmed, but just something that's been put out here according to a reporter on X. So just reporters on X following for the failed launch of the Iranian missile, it said that the Iranian channels claim that this was a test of secret missiles. Macklem says the economy is showing some resilience amid the trade war. So just about an hour to go until we get the Fed interest rate decision, where the Federal Reserve is expected to keep rates unchanged at 4.5%. We also get the summary of economic projections as well. So the market pricing sees around 99% chance of the scenario of the Fed keeping rates unchanged, and analyst expectations are almost all aligned on this. The SCP it will include the latest dot plot where Fed officials can plot where they think the interest rate will be at the end of this year, next 2 years, and in the longer run. Analyst expectations see these remaining broadly unchanged from the last SCP. So the FOMC median forecast for current year is seen at 3.875%, unchanged from the prior. The range is 4.375% to 3.625%. For next year, forecast also remaining unchanged at 3.375%, range of 4.625% to 2.875%. 2 years ahead, as said, forecast remains unchanged at 3.125%. The range is 5.125%, with a low estimate of 2.125%. And the long run forecast is 3%. Prior was 3.125%. And the range of 4.375% to 2.125%. General expectations then. So generally, with the US stocks markets will look for guidance on rate cut timing. Confirmation of 2 cuts remains in the SCP could lift risk assets. Conversely, a more cautious outlook stressing persistent inflation might drag on sentiment, especially in rate-sensitive sectors. If the SCP shows fewer or delayed cuts, the dollar may strengthen on expectations of higher for longer rates. Clear messaging that policy will remain unchanged could also buoy the currency, while any dovish shift may weigh on it. In regards to US government bonds, Treasury yields are likely to respond to any tweaks in the SCP. A more hawkish tone or extended rate path could lift yields, whereas reaffirming the 2-cut path could lead to yield compression. The auctions around this meeting will hinge heavily on the new guidance. In regards to federal policy, investors will pass the updated projections for growth, inflation, and the dot plot. Adjustments signaling fewer cuts or higher long-term rate expectations would hint at a more cautious policy path. And the Fed's emphasis on trade-driven stagflation risks suggests any shift in policy will remain very data-dependent. So first up, we have Wells Fargo. They said the FOMC is expected to keep the federal funds rate unchanged at its upcoming meeting and signal a continued wait-and-see approach. Economic activity remains resilient, with real personal consumption rising in April and steady job growth maintaining the unemployment rate at 4.2%. Inflation remains above target, with core PCE at 2.5% in April and likely inching up to 2.6% in May. Whilst recent CPI and PPI data were softer than expected, it is likely too early for the Fed to assess the full inflationary impact of recent tariff increases. Given these factors, the Fed is unlikely to alter its current policy stance. So, according to Al Arabiya, that Israeli broadcast says the Israeli army briefed Washington on plans to attack Iran. Macklem says consumer business sentiment indicators remain low. Coinbase introduces Coinbase payments for commerce platforms. So Israeli broadcast says Washington was informed of the attack plans to facilitate the entry of the US Army. So again, according to Israeli broadcast, being cited by Al Arabiya on X. Trump on Iran says lots of intelligence. So Trump speaking to reporters at the White House. So if you're looking at Fox News, you can watch him there live. But he is on the lawn again. Macklin says there's some distortion in our preferred core measures. And Trump ends remarks to reporters. So again, Trump offers no further details on Iran intelligence. So I-24 reporter says Israel reports that U.S. Central Command Commander Michael Kurilla met with Trump and presented him with military options in the Iranian context.
Just want to hop on really quickly here. If you are a community member, You probably want to go inside the Discord right now and see the suggested trade. And for right where we are right now in the market, it's a perfect trade for where we are at the moment. So get in there as fast as you possibly can. If you are a member of our community, go inside the market chat right now and scroll up just a few posts. And you'll see right here. Hold on. Did I do an ad everyone on that? Let me respond to that.
Going back to the expectations then for the Federal Reserve and the FOMC. Wells Fargo, they say in the updated SEP, or the Summary of Economic Projections, the FOMC is expected to maintain or slightly raise its inflation and interest rate outlooks. Risks to both inflation and unemployment projections remain tilted to the upside, consistent with the March SEP. The median 2025 dot may shift from indicating 50 basis points of easing to just 25, where the 2026 dot could rise to 3.625%. Inflation projections are likely to rise slightly higher due to tariff impacts, and GDP growth estimates may be lowered to just above 1%. However, the unemployment forecast may remain steady at 4.4%, reflecting constrained labor supply and firms' reluctance to cut jobs. So, Iranian Deputy Foreign Minister speaking to CNN says, if America intervenes, we will definitely respond.
I would personally, I think the cheapest way to take the trade is on SPY, but you could do SPX if you wanted. You could do it in futures too. I think my preference here would be SPY cheap. So we've got the trade of the day. Shit, that'll pay your whole entire membership for a whole fucking year. Oh, here we go. It's already printing. Yes. Here, guys, hold on. If you don't know what it is, hold on. You don't need me to Google search that for you, do you? You got it? You can also build it on optionstrat.com. And then execute it. Here, give me a second here.
So there was a headline on X about Israel. Broadcasting authority saying Israel estimates that the US will join the attack on Iran and the Fordo nuclear facility. That post is gone, so not sure whether that's still now news. But I said, took a look at it, and it just is gone now.
What are they saying?
Surely expecting the Federal Reserve recuperation data. Okay, so they have put it out again. Israeli Broadcasting Authority says Israel estimates that the US will join the attack on Iran at the Fordo nuclear facility.
Hang tight, guys. That's a beautiful one right there.
Forty counterparties take $205.050 billion of the Fed reverse repo operation.
Now that's for today. But remember, you got a day off. So if you did the 20th, which would be Friday, a little bit more risk in that one. But, you know, markets are famous for moving.
So now it's getting some further confirmation here. So Iranian Deputy Foreign Minister Majid Takht Ravanchi says Tehran will respond if US joins Israel's war with Iran.
I bet you could print that shit at some point. Those are two different dates. And remember, we got a day closed tomorrow. So what do dealers like to do on a closed day? Burn theta, make moves, right? Not pay you.
Israeli official to CNN says Iran has launched about 4,000 ballistic missiles so far.
What's your dates on that? Yep, that's it right there. I think that's it. That looks right to me. It's a little pricey. It's a little like 370. If you can get like a 370 price, that'd be nice. But it's going to start cranking in price right now. We're getting close. I was thinking about pouring a whiskey here today. I need a fucking bourbon. I haven't a goddamn drink all week. Like I need a fucking drink badly, Winky. I do. It's been like past like 5-6 days been like insano. Yeah, man. Like I was like, I'm gonna be chipper on fucking Thursday. And like I've been like getting hammered of everybody. Bam, 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 wife, kids, friends, you know, like it's like I've been like ragdolled. Give me like 5 more minutes to be right back, guys. Let's see if we can print this shit today. Shopwell. Hold on, I fucked that up. Shit.
Fitch Ratings says US fiscal outlook remains challenging despite near-term revenue boost. It's going to report say that Gabbard, according to Axios, cancelled Senate intel briefing amid Iran tensions. Gabbard cancelled briefing due to White House commitment.
Hold on, brother. You have to sign up for this, but it's free. I have a paid version, but there you go. You don't have to watch for the 70 on it. Like $3.35. It should cost you $3.36 or something, but the 380 is pretty close. You can try to sometimes you can open these by instead of doing the ask, you do the bid or split the bid ask, and sometimes you'll catch a fill on either side. And you can also fill them on either side cheaper if you want. If we're doing like a bounce up and down, we're doing like a bounce up here, bounce down there, fill either side.
According to Punchbowl, Wiles told Senate GOP to pass tax bill next week.
Then you can track profit. So if we get like a
White House chief of staff,
we get a bloodbath to the downside, burr baby burr. Get a blood upside. You got your targets already here too. Intraday targets. How to see them? There's 596.84. And you start burring anything. You start making bank down here.
According to Al Arabia,
so you start burring anything above this. Burr.
The arrival of an Iranian delegation.
I do like the
an Omani source denies the story that Al Arabia
the one more day personally, but I like the 20th better. But
to Muscat.
To each your own. You have to have you eventually at the end of the day you have to have your own thesis, right? You take responsibility for your own trade, so yeah, linguine and clams is a summer dish if it's not one of them nasty Midwest creations with like red sauce. If it's done with like white wine, garlic, you know what I'm saying? Fresh clams. If you're on the beach or something, yeah, that shit's definitely a summer dish. Give me one more quick second here.
Israeli army, cited by Al Arabiya, says our attacks are focused on Western Iran.
All right, here we go. Well, we're getting close to profit on the trade already.
Fitch Ratings on US says that they estimate Doge will yield annual savings of about $150 billion through spending cuts.
Yeah, I like agree with you on the linguine thing because tight air. I've seen linguine and clams done really bad. I like the idea of other like fruits demure on that dish too, by the way. But I've seen it done horribly wrong. Like most dishes that you're like, that's gross or that wasn't done well, when they're done perfect or right, or maybe you've never had a dish done the right way. Well, the first time you have it done the right way, you're, I get it now. There's so much food is not, like a lot of food is not done to the intent. And there's a lot of like interpretation. Like you'd be surprised at how many people don't know what a dish is supposed to be. I got my coffee. Oh, wait a minute here. I got to get some water. Hold on here. Well, we're dipping our toes. All right, I got my water. I'm with you, though. Now you, what, now you said no? You just said that was the one, I thought. I thought that was the one. It's almost in profit right now. Oh, did I miss something? Did I miss something? Hold on here. I got my shit ready to rock. I got, what do I do? What do I got going on here? Turn that off. All right, it's just a note to you if you're joining us for the first time today or if you come back here to watch the show. I appreciate it. Please like and subscribe. I don't normally ask that stuff. Post a link to this show wherever you are on socials. I'd appreciate that too. This show's free. I'm going to turn off, if I can, I'm going to turn off ads right now. Turn that shit off. Boom, done. If you're on YouTube, there'll be no ads from this point forward. I can't turn it off on Twitch. I don't know why. I apologize. I think if they Here, I think I just turned it off on Twitch. I'll try to turn off Twitch whenever I can. I have to like hand to do it. So I'll try to turn off ads whenever I can through this from this point forward. If you're looking for a stream that's not delayed at all, Twitch is the way to go. You can also watch on Twitter, some other places. We stream in Discords and blogs. We also do some Truvo. We Twitch stream there.
Then before the FOMC in about 30 minutes.
Oh, here we go. We're almost in money right now. We're almost in money, baby.
Expected to reiterate
596.46.
on hold until there's greater clarity.
Give me five. Give me the target down here.
While participants' assumptions around tariffs have likely risen since March, the recent soft.
If you took this trade right here, congratulations.
That policymakers will take a cautious approach in updating.
Oh yeah, baby! If you got in,
bold revisions are unlikely. The median projections.
If you're short futures right now, there's your target.
Slightly high inflation at
3.0.
2025.
Jackpot.
Growth at 1.5% and a modestly high unemployment rate of 4.5%. The median interest rate dots are likely to remain unchanged, showing 2 cuts at.
These guys are going to get out here in just a minute, by the way. They'll be out here shortly.
2 more cuts to 3.375% next year, and 1 cut to 3.125% in 2020.
Take the money down here. They're running out of time. This is the unrealized vol trade on today's FOMC. These guys are going to like escape like bandits. They ain't sticking. Oh, the hell was that? God damn it. They're not sticking around, I promise. Oh, look at that gorgeousness. What the fuck? Let's go. Come on back.
Just keeping an eye on the markets here, the S&P 500. Just seeing some downside movement. No news related to the move. We'll keep an eye out for if there is and relay that to you as soon as we can.
Did I delete everything here? Hold on here. Let's go. Back. There we go. Back at it again. Woohoo! Take the money and run, baby. Look at that gorgeousness down there. Target right here. Mwah! There's your fucking sexy up. You got a sexy ass up trade this morning. Sexy ass down trade to a pin strike this late morning and then to the early afternoon. Oh yeah, baby. So close to a print on straddles right now too. Oh, straddle guys are getting like, "Ooh, baby, just make me some money. Make me green." Likely not going to get it without realized vol though. If you don't know what's happening all day long, if you don't know why we went up on the opening bell, if you don't know why we're going down right now, I recommend that you join us in our Discord, in our community. Notice how we knew it was going up this morning. We knew it was going down this morning, this afternoon. If you don't know why, people tell you can't predict. You can a lot at the time you can. You might get it wrong, but if you get it wrong, you can invalidate that trade, know where you're going to head the other way, too. You're more than welcome to join us. TradeTheTrigger.com. Woo! Bad boy. Take your money and run. You dirty, dirty dogs out there. Blammo. Almost to a tick strike. Woo! Traded 598.04. Had a target of 597.98. Close enough in hand grenades and horseshoes to the tick. All these fucking future sellers are going to run away now. They're going to like pack up their bags and leave. Out of here. Now you're going to get a little bit of FOMO here. A bunch of degens are going to come in. Market's crashing, bro. Trade started all the way up here. Woohoo! Bam, bam. Look to see if buyers could take over here at 10:30. 12 o'clock, same thing. Rejected. Bam, bam, bam. Downtown, thank you, ma'am.
So a different headline now. What was originally said could be a typo from Sky News Arabia. He said CNN citing an Israeli official says Iran has launched about 400 ballistic missiles and 1,000 drones at Israel so far, only 20 of which fell on civilian areas.
That could be for their people though to hear. This might be astroturfing their own people. It might be true, but here I've got some. I'll try to read this stuff to you before you hear it from the news squawker.
Yeah, that's according to Sky News Arabia.
Sirens sound in Tel Aviv and many other areas in central Israel. According to Al Jazeera, no B-2 bombers have yet headed to the Mideast. No B-2s are capable of flying directly to Tehran with refueling support. Market corkscrewing tighter and tighter and tighter. Watch out for an upside move here to 60102. 60102 price target right here. Yeah, maybe 60117.
So according to I24 News, being cited by a journalist on X here, says the meeting between Trump and the commander of the U.S. Central Command of Israel met with Trump, presented him with military options in the Iranian context. So this was for the US Central Command meeting with Trump, and presented him with military options for the Iranian context. A source privy to the details told I-24 News.
You got like the Ayatollah Khomeini fucking trading on a Robinhood account right now. Got a bunch of, I'm not going to say it on stream, but take a look at what I just posted inside the Discord. Notice how we're heavily put-sided here on that one I just posted for you. Dude, look at this shit. I'm going to rip fucking faces off at some point, man.
Bank of Canada's Governor Macklem says, we are watching mortgage delinquencies closely, but we are less concerned.
I'm wondering if people are trying to keep vol bid with this bullshit news out of our. We're literally not trading any of this. Like, this market is not moving to that news. I mean, it's hitting the wire, but it's not. I'm wondering because we got a fucking vol crush coming in on we got vol crush coming in on the close today. A massive fucking vol crush coming in. That's a giant fucking vol crush. Notice though the vol kicks back up 9 days from now, which is when the end of our fucking our window. Cranking higher now, trading back, trying to get back to the magnet of 600 here. Option seller's delight. Squeezing back up into the release. We will have the release for you here. We'll also have the Fed live stream at 2:30. We'll have some commentary along the way. Hit and run gang leaving right now. Unrealized vol trade now dead. Returning back to the meme or the mean at 6,000. If no bad news, we're going to rip some fucking faces off into Friday. That was a sweet little tag down there, wasn't it? Oh, God, yeah. I'm not going to tell you where we're going on stream. I did show you the targets in a chart. This one right here. We're going to magnet that into the bell. This one right here, it's got, I'm going to put a bunch of emojis on it. That's what, if nothing happens, we will magnet that towards the bell or possibly Friday. Of course, we have unknown unknowns. I'm not going to put it on the chart because I don't want fucking 10,000 people taking the trade. We'll just keep it in the Discord, okay? Every time I take a fucking trade on public, it gets countered. Well, it doesn't get countered, it's just lopsided. It's same thing with Twitter. Like, I just can't. Every time I post some shit on Twitter, it's like, God damn it. So, like, just leave that shit in the Discord. Look, then it always prints. Like, anything I say public is like, fucking, I can literally watch the flows come in. I'm like, God damn it. I posted those already. You can see I posted you an SPX where to buy the dip. It says CJJ. And then it's got upside targets up there. You can see it, right? That shit's already, those calls are already printed, aren't they? Those fucking bottom calls. It's a gorgeous trade right there. If you're watching the stream and you just took that trade, congratulations. Note, though, that we still have event risk at 2 p.m. You know, we can whipsaw if you missed it. We got a whipsaw down. You want to buy it on some good news?
So in 10 minutes time now, at the top of the hour, we do get the anticipated US interest rate decision. Forecast is for no change at 4.5%. With this today, we do also get the FOMC summary of economic projections as well as the FOMC rate statement as well. So looking at a note from UniCredit ahead of this, they say the Fed is widely expected to keep its target range for the Fed funds rate unchanged at 4.5%, following its meeting on June 18th, in line with market expectations. They say that Fed officials have emphasized a patient approach as they await more clarity on the economic impact of recent government policies, especially tariffs. Resilient economic activity, particularly in the labor market, has supported this cautious stance. UniCredit note that while disinflation has continued, the effects of new tariffs on consumer prices are expected to materialize gradually, delayed by a surge in pre-tariff imports and firms' hesitation to raise prices immediately.
Take the money, Shintech, and go, man.
The Beige Book and ISM Manufacturing point to looming price increases.
Close it out.
Short-term consumer inflation expectations have moved higher recently. The updated dot plot in the SEP is likely to reflect a close call between 1 and 2 rate cuts this year, with a base case of 1 cut in Q4. Officials are also expected to revise growth forecasts lower and core inflation forecasts higher.
Bartarded Baker, where are you from? Like tap 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 tap. Heck yeah, brother. We got a lot of Texans in there. Pleasure to meet you, brother. Coming into the STD line right now. Also have a bull plane forming on the 5 and 1 minute trigger. Let's see if we can see anything on the 30-minute really quick. See if Velo's on our side or not. Velocity looks fucking sexy. Woo! Velocity looking good. If you have access to Velocity right now, take a look at it on a 30-minute basis. Looks really good. Coming back to the mean right now. That's 606,000. I've been focusing on that the past couple days. What up, Fam Bam? How you doing, brother? Just pinging and ponging right now. Note at the market now is going dark. You see this chart that I got right here? This is Bookmap. You can see liquidity leaving the market currently, awaiting the Fed rate decision and the SEP. Being a quarterly expiration and an FOMC and a Vixperation.
Now at the top of the hour, we do see the release of the US interest rate decision. Median forecasts and market pricing see the rate remaining unchanged at this meeting at 4.5%. With this decision, we also see the release of the FOMC rate statement and, more importantly, the FOMC's summary of economic projections, where we get the latest dot plot revisions from Fed officials, where they forecast their rate expectations for the current year, next 2 years, and in the longer run as well.
Yeah, note that we get the SEP. It's a quarterly report released by the Fed, provides an overview of economic forecasts. You're going to get some dot plot action today. You're likely going to get some movement in the dot plot today. We don't know yet how all of this, the changes and the tone and the questions There are some you're going to get some questions from reporters. Remember that reporters are looking for gotcha moments, and they got editors that are like, get them to answer this question. So put a little bit of they get more regarded as the day goes on. Yeah, mortgage delinquencies are not bad right now. That's a scam perpetrated by socials. Mortgage delinquencies are fine right now. Macklem's saying the same thing. You're getting some of the truth right now. We got the Federal Reserve all keyed up here. Got their website direct here. We will have the Fed live on the show today.
1 minute remaining. I'll lead with the US interest rate decision.
SPY with a bull flag, or a bull plane, excuse me, on the 1 and 5 minute trigger. Velo in its favor. You're looking to get long or short, be looking lower and higher. Remember that this trade will fade as we get closer to the presser. There's 3 trades here. This one, presser, and one towards the end of the presser.
No change, no change. Rate remains unchanged at 4.5% as expected.
SPY hitting R1 with a failure just below it, to be expected.
So looking to the FOMC.
Vol getting crushed right now.
SEP medium forecast shows rates at 3.6.
Trading 60061
in 2027.
Looking for a target of 60113.
Projection ticks up to 4.5.
Looking for a tick just over here, maybe a failure to start and then get up of it.
About risks of higher unemployment and inflation in its rate statement. The Federal Reserve
take the money and run.
1.4% GDP.
We got 3 trades
versus 1.7% in March. They see longer run at 1.8%, unchanged from March. Unemployment rate remains low and the labor market conditions remain solid.
Have another trade at the close too.
Recent indicators suggest economic activity has continued to expand at a solid pace.
Woo!
Fed policymakers see a 4.5% unemployment rate at the end of 2025 versus 4.4% in the March projections. They see the end of 2025 PCE inflation at 3%, which is up from the 2.7% they saw in March. Core is seen at 3.1% from 2.8% in March. So projections show slower GDP growth, slightly higher unemployment, and somewhat higher inflation than the March forecasts. Fed vote in favor of the policy change was unanimous. 2025 GDP projections again fall to 1.4% from 1.7%.
They're going to set the trade up one more time here.
Some of the main points then. FOMC medium forecast still shows 50 basis points of rate cuts this year. Again, holding the benchmark rate unchanged today at 4.5%.
Everything in expectations right now.
Updates now to the SEP dot plot then. So the current year rate forecast.
This is pretty fucking bullish. They did not change the expectations.
Lower than the forecast 3.94%. Next year rate forecast from the Fed 3.625%, which is higher than the forecast 3.375%. And the next 2 year rate forecast plus 2 year ahead 3.375%, which is higher than the forecast 3.125%, and the long run at 3%, higher than forecast 3.125%. So looking to the market here, the dollar did see a little bit of weakness, which is somewhat holding as the release has happened now. Just really a whipsaw in the S&P 500, no sustained.
To be expected. If you want the full written statement, it's right here. Dropping inside the Discord. There is some notes here. There was an expectation today that the dot plot would change, but it's not being changed. Fed maintaining. Still forecasting 50 BPS in rate cuts in 2025. There was an expectation that it would change over. If you took the trade when I told you on the stream above here, congratulations. If you took the money and ran like we told you up here, good job. There are people in the Discord that are saying that they did take the money. Thank you, Nick, for pushing that out there. Appreciate that, brother. I also want you to refer back to the...
Just factor in 46 basis points in rate cuts for this year. Little changed from before the Fed statement.
Refer back to the SEP reaction function.
The Fed cut in September was 60% before the data.
That I posted in your brief. I'll post it again inside the Discord right now. I don't know where the fuck it is. There it is. You ready for the next trade now?
Some commentary from former Federal Reserve Vice Chair Clarida says Fed decision is a dovish lean from the committee.
It is. He's playing ball with the
trade is still almost fully pricing into Fed rate cuts this year. Again, little changed really from before the data.
Yeah, they were expecting one cut to be removed. I was too.
To 85% from 80% before the Fed assessed.
That is a very dovish Fed right now. And now you're not seeing any of the language being made hawkish here. Someone. Hold on here. If you're looking for the second trade, it's coming up soon. At 2:30, there'll be another trade. Note that, remember, this is the 4-hour bar right here. Man, look at that wick on the 5 minute. You guys are getting good at trading. You guys are fucking good. Go on, take the money and run. You guys are fucking savages. Oh yeah, baby. Fucking right. God damn. The poly market should fucking totally run that. All right, so we're coming into, we got a secondary trade here. This is your next one here, or this is your next big drop right here. Make that one yellow. Make it a big old 2. This is the STD. This is your this is your depressor. Depressor. Meet the depressed. If you don't know where we are and you're joining us inside the Discord, you can scroll up. We've got some trades, some expectations, some implied moves into the end of the day. Oh, nice, Nick. Fuck yeah, Nick. I'm going with blue, dog. I'm going blue. I voted. Don't fucking vote with me. Vote with what you think. Yeah, purple's the way to go. Oh, dude, we got a bear. Got him. We got a fucking bear, red. We got 2 bears. God, I knew you guys are out there lurking. Fucking looking at the put skew. I'm like, these motherfuckers are loading the tit. They're loaded to the tits with puts. Which one of you motherfuckers? Which one of you guys voted red? It's a little bit less purple this time. Purple isn't a color. Yeah, we should give a huge shout out to give a huge shout out to Trader Podcast. This fuck your puts. We need to find Trader Podcast video. Hold on here. We gotta give a shout out to Trader Podcast. He's a member here. Maybe we can ring him up. We'll see if Trader Podcast got any hot and fresh memes. See if he'll pop in the Discord, maybe. Let me see if we can find a. He's like a legend now. Well, let's see if we can find one of his memes. Did they steal his shit, maybe? Dude, his shit's been stolen by everybody. He's expanded upon it before, though. He's got super long ones. Oh, somebody deleted it? Why? Oh, they've deleted the meme? Why? Hold on, I gotta find I have it. I've got it somewhere. Oh, here we go. I got it. Hold on here. I've got a pre message from Jerome Powell for you from Trader Podcast.
Hi everyone. Thank you for being here for legal purposes. I actually just woke up an hour ago, threw on a suit, and didn't even wash my balls, but it's okay. As you all know, I'm Jerome Powell, and let me tell you, inflation is a real pain in the ass.
Dude, this guy Roperito's saying it's his. It's not. This is Trader Podcasts.
Like I was saying to my good buddy Kashkari that day, what could an egg normally cost man? $10. Just seems like a lot of unnecessary complaining. Back in my day, a G-Wagon cost around 100 bands. And now almost twice that. That's why I really feel for the average American.
You're on vacation?
Wife's boyfriend, no matter what. It won't go down on you enough in the long run. But don't worry. We at the Fed know exactly how to handle it. We have tools in our arsenal to keep inflation in check, such as adjusting interest rates and pretending to reduce the balance sheet, while the Treasury continues to do QI. As for interest rates, they're like a roller coaster ride. Wish my wife would do that. Too bad you're stuck on this ride for the long haul. And as for bulls and bears, they're like two chefs for Putin trying to cook up a storm in the kitchen, one stirring the pot with too much force and the other poisoning it too lightly, but in the end they both get pushed out a window for not following the recipe correctly. Let's be real here. It's all a game, and we're the ones making the rules. As my mother used to preach to me when I was merely a baby suckling at her tit, fuck your puts, fuck your cuts, fuck your calls. JPOW will have you by the balls. What a visionary. Anyways, I digress. Thank you, and I look forward to your questions.
Thank you, Colby. Mr. Powell, with all of this talk about sticky inflation and tricky markets due to you regards, are you considering a career change and becoming a professional clown? If not, when will you be buying stonks again, and which ones? The Financial Times aren't paying me enough to deal with this shit, and I lost the rest of my money on slot 300s.
Every opinion you all have about the economy and other current events is wrong. You think stocks will go up? Wrong. Down? Wrong. Sideways? Also somehow wrong. Down? Wrong. Sideways? Also somehow wrong. Do you admit you don't know? You think Ukraine will hold out and win? Completely and utterly wrong. Or perhaps you think Ukraine will capitulate at any minute. Never before has anyone been so wrong. I think Zelensky should do this. No, he should not do that because of how wrong you are.
The U.S. Treasury issues a Russia-related general license authorizing certain services related to the Sakhalin 2 oil and gas refinery. It's according to the Treasury website.
Nick Timmeros of the Wall Street Journal.
What up, Timmeros?
Core PCE inflation on a 3 or 6 month annualized basis and on a 12-month basis has been running in the high fours, close to 5%. Is there any reason to think you won't have to raise rates at least above that level to be confident that you are imparting enough restraint to bring inflation down?
Well, Let me tell you what is truly captured in that thought. The magnitude of how fucking wrong you are. I know what you're thinking. I'll just inverse every
Look at that blue fucking tie, baby.
rich off all my trades. Guess what? By simply birthing that thought into the ether of the world means that it's wrong. And no matter how many infinite inversions of your thoughts that you take, you always be dead fucking wrong. The universe has willed it. It's like electromagnetic or gravitational forces, an ever-present constant throughout the fabric of every possible space-time reality. So next time you make me some dumbass bullish or bearish position or talk about CPI like an asshole, just know that you're completely wrong about it and always will be. That said, SPY at 320 by June. In conclusion, we are all fucked. Klaus Schwab is currently holding D's nuts hostage.
These nuts.
And may God bless my money printer. Thank you.
Oh god, that was terrible. All right, so we're waiting JPOW right now to come out. We were having a poll as to in the Discord. Let me go back and look at the poll and see what the poll results are.
US Embassy. The mission personnel have begun departing Israel.
So far, we've got 53 votes. We got purple in number 1. Votes are changing. We got purple in first place, blue in second place, and we got tie for red and other. We actually have some. We got a bunch of goddamn bears. I can't believe how many bears. That's okay, bears. I love you. Will JPOW see his shadow? Yes or no? SPY making its way higher again into the presser. We'd already know that we've got a dovish Fed. We definitely have, for relative to what he could have been today, he would have been a pass for he could have gotten, slightly more reined in. We also know that he's been hanging out with Besant having eggs Benny, quiche, and oysters once a week. So it seems like he's playing a little bit more ball. Can you imagine him like staying the Fed chair? That would just be fucking, that would be, ugh. You can be a bear. I get it. I understand why you're a bear. I love you, Goliath. $100. Fuck yes.
Spot gold edges up after the US Fed rate decision, last up around spot 1%.
That would be a total Trump move, wouldn't it? Bash fucking Powell the whole time and then reappoint him. Trump looks around and he's like, fuck, I can't, nobody else. I gotta keep Powell. $11 minutes left. Dude, Trump's gonna replace him with Yellen. Oh my God. Oh, Jesus. When I read her stuff, like, I wasn't in the market then, but I do remember what she said.
In 10 minutes time now, at the bottom of the hour, we see the start of the FOMC press conference with their chair Powell.
In like 2000
video on the feed for those interested.
In 2007, 2008, I was living in Vail, Colorado. And I knew the Enron boys. I used to ski with those guys and hang out with them. Not just them, but the guys around them and stuff. And dude, you like in the Great Recession, like it was like night and day. Before the recession hit, before the market crashed, Vail just went ghost. It was like you were going from like drinking like $1,100 bottles of Cristal to
Swiss envoy to Tehran as representative of U.S. interests.
Duckhorn or some shit for $100, you know. And
protest Trump's provocative remarks, I should say. This is according to Iranian media. To repeat, Iran summons the Swiss envoy to Tehran as a representative of US interests to protest Trump's provocative remarks.
Dude, there's like I'm telling you, there's like market participants right now that are trying to keep vol bid. Vol is supposed to fucking crater. I mean, like crater. Like sometimes financial juice is like, you can tell, no offense to them, but you can tell that somebody's like, I'll give you $500 if you just say Iran doom. Keep vol bid. Yeah, he does want the mantle himself, and that is the truth, right? He wants to right now there's like carpet, or there's astroturfing where they're like the news and the proponents of Trump are like, we think it's gonna be this guy and that guy, and what makes them good. And so they push the narrative that the new Fed chair will be more dovish, but that is not why they want a new Fed chair. They want a new Fed chair during Trump's term. So I don't know if you don't understand all of this, but I'm not going to go into too much detail here right now. I have in the past, but not right now. But basically, the executive branch has been doing this since Trump was elected, which is that you assert, it's a key word, assert authority over a functioning government. And what you do is you throw shit against the wall. You throw assertiveness everywhere, and you see what sticks and what doesn't. So the more you have someone on your side, the easier it is to assert that authority, basically. And if it's given up by whoever holds that authority, it becomes more defendable in court. And the Fed is one of those agencies where if the Fed pushes off on that, the Fed is okay. But if you put in someone that's if you like install somebody that is like willing to make a deal with you to allow that assertion of authority, what it does is it sets a new precedent. And so you can then argue a point in a court of law. In that, you can simplify this. If you and I live next door to each other and we own a house and you own a house, and I put a fence up while you live next door, and depending on where you live, if so many years pass, I can make a claim that you allowed me or didn't stop me from doing that while you own that property. And I have an argument at that point. You know, Bob watched me put that fence up. He never asked me for a survey. As a matter of fact, we were chatting. I got pictures of it. You know, I've actually got our conversation recorded. Hey, Bob, I'm going to put a fence up, man. Seems like it would be best between these two trees over here. Right? Hey, Bob, I'm driving my car. Do you mind if I drive my car, you know, through here or whatever? And it's an argument at that point. And if you guys like, I have an actual general counsel, believe it or not. I have like a battery of attorneys. But if you ever had an attorney or a family attorney, they like to have something to argue. And sometimes that argument is bad, right? They're like, oh, they're going to argue this. Can't do that, right? When you have nothing to argue, it can be worse for you, but the more you have to argue, the better your position is. And not everybody realizes that, right? So that simplified is, you know, a lot line maybe in between two properties. can be a basis for an argument to change those rules. I'm not going to get into like what the Fed is and the Fed Bank and quasi-private, quasi-public, and they're profitable on their own, pay for themselves, all that kind of stuff. I'm not going to get into that. But what really matters more is the argument. How do you make that argument? So the real truth is, think about how you're reading stories right now, where people are saying, "Oh, this guy and that guy, they're gonna be more." The focus is on, will they be more dovish or not, or will Jerome Powell be more dovish? But that is not the true intent. True intent is to have Trump attempt to, for a second time, to attempt to assert authority over the Fed. Now, the first time he tried to assert that authority, the Fed told him to go basically eat a bag of dicks, right? Some other places have not, right? Some places didn't find that they could. Some were tied up in bureaucracy, and he asserted authority, and now he's got arguments to take to court to assert that authority. So you have to, different places, different things. How people can or do not have or resist that assertion of authority over parts of our government. So whoever said that in the Discord, you are correct. You are correct that he wants to install someone different in truth. It's not because they're dovish. It's to assert a more executive authority over that department. It's not quite a department. It's a bank more than anything, but man, it's quasi a department. Okay, so we're coming into the Fed presser now. We have 3 minutes left. I'm going to put it up in the bottom right-hand side of your screen so you can watch Fed Chair Powell speak. Oh my God, I'm not going to get a ping on this. I have turned off ads on YouTube, but it is a delayed stream natively from YouTube. Also note that YouTube does delay streams not natively, and if you have a ad blocker, they slow you down on live streams. So that's even worse. So what you can do is, I did turn ads off on YouTube, so you can turn your ad blocker off. You shouldn't get an ad blocker from my end. I won't get paid if an ad pops up. I don't think you will. On Twitch, if I see any ads pop up, I'll try to stop them. I have to hand stop them for this presser. Now, as we come into this presser here, I want you to realize that this is a little bit more volatile sometimes than the press release. You can oftentimes in the beginning, there's a lot of pre-screened questions, and then it devolves as the day goes on. You also want to know, too, a few other things. As we get out of the presser, you'll see the trade will be done. The market will begin to make its way into the end of the day, into where it really wants to go. And then you'll get the real move.
Expecting the FOMC press conference to begin. Also did get some earlier headlines here. Microsoft is planning thousands more job cuts aimed at salespeople.
You will end up getting the bigger move after the close today. The market's closed tomorrow. Dealers love killing shit over these closed holidays. Love it. Making bigger moves, not paying you, not paying the option holder, the owner. The other thing to consider here, too, is that we're heading straight into quarterly OPEX on Friday. You want to be thinking about where price should be into the close of Friday OPEX. Here we go.
Dual mandate goals of maximum employment and stable prices for the benefit of the American.
Still purple.
Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I'll have more to say about monetary policy after briefly reviewing economic developments. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were driven by businesses bringing in imports ahead of potential tariffs.
When you're listening to this, think about what Wolf Richter tells you, because he tells you straight, just like he's telling you.
Or PDFP, as we call them, which excludes net exports, inventory investment, and government spending, grew at a solid 2.5% rate. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a decline in sentiment over recent months and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.4% this year and 1.6% next year, somewhat slower than projected in March. In the labor market, conditions have remained solid. Payroll job gains averaged 135,000 per month over the past 3 months. The unemployment rate, at 4.2%, remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. It is not a source of significant inflation pressures. The median projection for the unemployment rate in the SEP is 4.5% at the end of this year and next, a bit higher than projected in March. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.3% over the 12 months ending in May, and that, excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up over recent months, as reflected in both market and survey-based measures. Respondents to surveys of consumers, businesses, and professional forecasters point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 3%, somewhat higher than projected in March. The median inflation projection falls to 2.4% in 2026 and 2.1% in 2027.
You see that quick bump up in PCE this summer?
To promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%, and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to trade, immigration, fiscal, and regulatory policies continue to evolve, and their effects on the economy remain uncertain. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and thus of the related economic effects, reached a peak in April and have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year, the same as projected in March. The median projection declines to 3.6% at the end of next year and to 3.4% at the end of 2027, a little higher than the March projection. These individual forecasts are always subject to uncertainty, and as I've noted, uncertainty is unusually elevated. And of course, these projections are not a committee plan or decision. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on issues related to assessing the risks and uncertainties that are relevant for monetary policy and the potential implications for policy strategy and communications. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference that we held last month. We are open to new ideas and critical feedback.
Just a note, first target hit right here.
5 years in determining our findings.
That's this one.
Any modification.
Now looking to hit this one right here.
Policy strategy by late summer. After that, we will consider enhancements to our suite of communications tools.
This one is done. Now I want to see that one get hit.
Been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Colby. Thank you. Colby Smith with the New York Times. To what extent has the more limited impact from tariffs at this stage on inflation changed your view on what the ultimate economic fallout will be from these policies and the timing of when they will materialize in the data?
So we've had 3 months of favorable inflation readings since the high readings of January and February, and that's, of course, highly welcome news. Part of that just is that services, core services, both housing services and non-housing services, have really been grinding down toward levels that are consistent with 2% inflation. So that's the good news. We've had goods inflation just moving up a bit, and of course we expect, as you point out, we do expect to see more of that over the course of the summer. It takes some time for tariffs to work their way through the chain of distribution to the end consumer. A good example of that would be
squeeze them.
Sold at retailers today may have been imported several months ago before tariffs were imposed. So we're beginning to see some effects, and we do expect to see more of them over coming months. We do also see price increases in some of the relevant categories like personal computers and audiovisual equipment and things like that that are attributable to tariff increases. In addition, we look at surveys of businesses and
crush that fucking vol, bro.
You do see a range of things, but many companies do expect to put all or some or all of the effect of tariffs through to the next person in the chain, and ultimately to the consumer. Today, the amount of the amount of the tariff effects, the size of the tariff effects, their duration and the time it will take are all highly uncertain. So that is why we think the appropriate thing to do is to hold where we are as we learn more. And we think our policy stance is in a good place where we're well positioned to react to incoming developments.
So in terms of how we should interpret the rate cuts penciled into the SEP, is this reflecting that there's this expectation that underlying inflation will just stay well enough contained that allows the committee to eventually move ahead with those cuts? Or is it about, responding to a deterioration in economic activity, let's say? I mean, how should we make sense of the forecast?
So if you look at the forecast, you will see that people do generally expect inflation to move up and then to come back down. But we can't just assume that. Of course, we don't know that. And, our job is to make sure, one of our jobs is to make sure that a one-time increase in inflation doesn't turn into an inflation problem. And that, again, that will depend on the size of the effects, how long it takes for them to come in, and ultimately on keeping inflation.
Now looking for this one right here.
Hi, and thanks, Chair. Howard Schneider with Reuters. If you look at the rate path starting in December to today and adjust it over the full time horizon you've got there, you've taken about a quarter point per year.
More.
At a higher rate at in 2027.
More.
Is that a result of a sense that tariffs will lead to more persistent inflation? Is it a result of reassessments?
Slap the fuck out of 60113. Do it.
So I would focus most
Keep going.
on the nearer term as you get out to the later years. It's hard for anybody to know where the economy is going. You didn't see people moving their longer term, estimate of the neutral rate.
Keep fucking just hit it.
At this meeting. So, and those things are probably slow moving. So I think if you look,
Next target 60177 601.
a little slower growth.
We're close.
Tiny tick up, 1/10
60104.
in unemployment, and you see inflation moving up 3/10.
God damn right. That's good. That's good. That's good. That's enough.
December SEP to the March. So that's what you see. You see the effects of tariffs. I think we learned in April after the March meeting that
They're gonna try to plunge it again. Remember, they're gonna try to fucking kill it, reprice the whole way.
we're adapting in real time, and what you see is an accumulation.
New high in the prior high over here. New high in the prior high.
You say in the statement that risks have diminished on that front, but the July 9th, drop dead date for all the Liberation Day tariffs is still out there.
That's gone.
You've got now exchange of missiles between two Middle East adversaries with a possible U.S. involvement. How can you justify saying that risks have
This is all gone.
So what we said was that uncertainty.
So be careful here, because they're gonna try to
Management remains elevated. Many.
plunge that shit down to get up there.
That's actually a line from the Teal book, which you can see in 5 years. Remember to check that.
maybe the war will be over?
No, but if you think about it, tariff uncertainty really peaked in April, and since then has come down, and that's
Fucking gap filler motherfuckers up here.
still elevated.
See that fucking bar up there?
I think that's an accurate statement.
Thank you. Chris Rugaber at Associated Press. There is an argument out there in favor of cutting rates more immediately. Inflation has continued to cool and is back at to roughly 2% despite the tariffs. And I guess I also wanted to ask about, cracks in the job market with gross hiring slowing, concentrated in just a few industries. We've seen some housing data, including this morning, that has been pretty weak. Do you see any concerns that the economy?
Sorry with the swearing. Apologize.
Going.
Apologize publicly for swearing right now. I was in a trade.
I think if you look at the overall picture,
My bad.
is 4.2% unemployment and an economy that's growing at a rate hard to know given the
R1 tag.
flows in the first quarter.
R2 is 60365.
Maybe a little better than that. Sentiment has come up off of its very low levels.
Oh yeah, that's right. That's right. Come on back down. Come on back down.
You can
Okay, come on down. A little bit more.
longer run problem,
A little more.
run problem.
Right there. Go down right there.
Come
on down, baby.
housing,
Been
and
trading this shit for years. These FOMCs. Come on down. Come on down.
market is to restore price stability in a sustainable way and create a strong labor market, and that's the best thing we can do for the housing market. You asked about the job market. again, look at labor force participation, look at wages, look at
Oh yeah, that's right. That's right. Come on down.
now. I would say
Touch it.
perhaps
Touch it. Touch it. Touch
very
it.
slow continued cooling, but
A little bit more.
at this time. But
Take all their stops.
very, very carefully.
Get a little wick down there. Give me a wick.
Again, the current stance of monetary policy leaves us well positioned to respond.
Yeah, a little bit more. That's right. You got to take their stops, dog. Flush them.
Be watching the data carefully.
Well, just quickly on, given that, the
Oh yeah.
inflation will rise, but there is the alternate
Take a little bit more of the stops. Time. One more time.
destruction and slow
Take them out.
sufficiently.
Your hedge fund, you know exactly where the stops are. They're like down here, then hit them.
Odds of that scenario, what kind of odds do you see of that scenario coming true, and how many months
Yeah, it's a pretty good tick right there.
would you need to see before concluding that?
Want to see that? We're not that quite there yet.
Very much the conversation we had.
How about like right there? Hit that one right there.
Different scenarios, many combinations of
Don't leave me behind.
where inflation does or doesn't prove out to be at the levels we think, and where the
I
labor
mean, like
market does or
like
doesn't.
one quick like red bar, and then look there. Just do it. Nope. Don't do that.
At a time of very high uncertainty, and writing down what they think the most likely case is. No one holds these rate paths with a great deal of conviction, and everyone would agree that they're all going to be data dependent, and that you can make a case for
Oh, it's not conviction. It's fucking gambling, Jerome.
see in the SEP. And we do this once a quarter. It's a hard thing to do at this, particularly at this time. But it does reflect. If you see somebody writing down a rate path that involves cuts, that's them saying, yes, I think we will get to a place, more likely than not, where cuts will be appropriate. And it could be a joint probability of a number of possible outcomes. Again, remember how much uncertainty we face, though.
You should, Jerome, ask them how many cuts they want. All of them.
If you could describe for us some of those scenarios, how do you get to a place? I'm noticing that the uncertainty levels in your forecast are very high. How do you get to a place where you have the confidence in the outlook for, say, inflation?
Oh yeah, get down there. Do it.
The unemployment rate. How many months?
Hit that. Dude, take all their stops. Just do. You already know where they are, bro. They're right down there.
Off the restrictive level.
So it's very, very hard to say.
Yeah, get down there. Just like one quick plunge. Come on down. Come on down, baby. Just hit them.
Quickly. As long as the economy is solid, though,
Come on, hedge fund. Do it.
kind of labor
Yeah.
reasonably
Yeah.
moving down, we feel like the right thing to do
Slap it.
is to be where we are, where our policy stance is, and just learn more.
You need one more plunge. You haven't taken them all. Take them all. Take them all.
Over the summer on tariffs, we hadn't expected them to show up much by now, and they haven't. And we will see whether, to the extent to which they,
We're having a liquidation break. No, you're not. You're taking their stops so we can go up.
for one thing. In addition, we'll see how the labor market progresses. So at some point, it will become clear. I can't tell you exactly when that will be. And meanwhile, we'll be watching the labor market very carefully for signs of weakness and strength, and tariffs for signs of what's going to happen there. And of course, there are many developments ahead.
There is it's not quite there yet, but
We don't yet know with
been a little bit too much time here.
We have an estimate, and it's a pretty, I think,
A little bit, not quite there yet.
but it's highly uncertain.
A little bit of rope-a-doping.
Estimate of the impact of tariffs on the core PCE, is that what it is? And could you share that?
What you start with is what's the effective tariff rate over
I wanted to see the slap like here
the past
or here, but
tariffs to consumer price inflation.
watch out. They might keep us rope-a-doping down here for a minute or two.
There are many parties in that chain. There's the manufacturer, the exporter, the importer, the retailer, and the consumer. And each one of those is going to be trying not to be the one to pay for the tariff. But together, they will all pay for it together, or maybe one party will pay it all. But that process is very hard to predict. And
Well, consumer has to be shitty.
I think we have to be humble about our.
They will absorb it as long as they don't get angry, which they're not. They are angry publicly, but they eat that shit.
We'd like to get some more.
And you know that they can't pass it on once the consumer is banged up.
Remains in solid condition.
Oh, there it is, right there. Fuck yeah, take their fucking stops. I knew it. See that shit right there? We got a liquidation break. No, they're taking their stops is what they're doing.
Chair Powell, I guess I'm wondering if you could explain a little bit more
They take your stops and your stops and your stops, the pain.
25 rate projections. I realize this is, you have one group of officials that are putting down no cuts, another that are putting down
Also note, did we ever hit the downside expectations for day?
Recognizing that could be difficult to summarize.
Nope.
But is it a matter
Just a note, we have not hit.
of outlook or a different reaction function?
Do we hit it?
Commitment to defend.
Yeah, there's one more left. There's this one.
How did that
This one hasn't been hit yet.
play out over the last?
This one's been hit.
So you're right.
No, we missed that one too.
In the case, we have
We missed it by a hair. Look at that. We missed it by a tick.
we did have strong
Ooh.
decision and broad agreement.
Ooh.
It's in a good place. But I would point to two factors, and you mentioned them.
Here's the 4 hour.
Just that parties have a diversity of forecasts.
We never hit this. We never hit the tick. We never did like
where their dots are.
tick,
So if you
tick,
have higher inflation
boom.
forecast, you're going to be less likely to be right.
I don't know if we're gonna do it, but hit both sides maybe.
But remember, as
Definitely took stops here. You can see the wick now. Buyers coming in.
that means when it is time to look at normal
But you got a roll here. You see that roll?
normalization process, the
I
difference
haven't gone long here in this trade yet.
is smaller because we'll have seen actual data. Right now, it's just a forecast.
There's like a downside trade to hit the daily expecteds.
People can look at the same data, and they can evaluate the risks differently, as you know.
Watch this closely.
Includes, the risk of higher inflation, the risk that it'll be more persistent, the risk
Just right here, like murder and then up.
assessments of that risk.
Might be a murder bot in here. Watch out.
So those are the two ways.
See it right here?
The two things I think that drive these things. Remember, though, as I mentioned earlier, with uncertainty as elevated as it is,
And just plunge your ass like bam, 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 then oof.
So that's really where it is. It's a function of those things, and I think as the data come in, you should see those differences diminish.
If I could follow up, you've said the policy is in a good place and that it's modestly restrictive. Given all the uncertainty you just talked about, tariff levels, uncertainty around the pass-through, is it price increases versus margin compression, some of the softness that Chris talked about in labor and housing, why wouldn't it be better to have rates at a more neutral setting as the economy heads into this period of very high uncertainty?
So if you just look backward at the data, that's what you would say, but that's not. We have to be forward-looking, and the thing that every forecaster, every outside forecaster, and the Fed is saying is that we expect a meaningful amount of inflation to arrive in coming months, and we have to take that into account. So I think a backward-looking look would lead you to a neutral stance, but we can't. We have to look at that, and because the economy is still solid, we can take the time to actually see what's going to happen. There's a range of possibilities on how large the inflation effects and the other effects are going to be. So
this is all one motion here.
just wait a couple of
It's literally the same motion.
of really
And they're stop hunting all of you down here.
what's going to be the effects on spending.
So there's a guy over here that's long.
Michael McKee from
And they're going to fuck this guy right here.
your friend down at 1600 Pennsylvania Avenue continues to lob insults in your direction. And I'm wondering, given now that the Supreme Court has maybe carved out the Fed from some of the legal.
That guy right there.
Whether this is just
He's right there. That's where he is.
markets and everybody should ignore until you're.
Now this is the reverse Batwing. Watch me close. Remember last night's brief?
Could lead to
Watch this closely.
confidence of
Reverse Batwing, right?
consumers about the outlook for the economy.
You see it?
From my standpoint,
Batwing.
it's not complicated.
Now we don't know if we go down into the bell and then up into Friday.
With strong
Watch this closely here, guys.
price stability. That's what we want. We think our policy is well positioned right now to deliver that.
So
and to be able to.
So this is 1600, right?
The economy's been resilient,
So you come down here, right?
and again, we think we're in a good place on that to respond to significant economic.
Slam,
That's what matters. That is what matters to us. Pretty much, that's all.
and then up and away. Something like that.
Ask, assuming you are not reappointed, would you stay on as governor when your term as chair?
Watch as it happens. We'll do it together.
Thinking about this.
Andrew.
Thanks, Mr. Chairman. I guess with workplace raids increasing, picking up significantly, what kind of effect would that have on the labor market in
Sorry,
the short
with
term?
what picking up?
Oh, sorry, I got that wrong.
Raids.
So you're asking immigration.
Yeah.
You know, I wouldn't want to speculate. What one way to get at that from an economic standpoint, we of course don't comment on immigration policy.
We got one more down here too, don't we?
But
Oh,
that has been really solid and at a low level.
oh.
Been in a good range and well within the range of mainstream estimates.
Might be a nice trade down here. Close.
Like part of that is that labor demand and labor supply
Doom.
are kind of moving down at the same rate. Labor demand is softening. You see that in
Should
jobs.
squeeze here soon.
Still kind of at a healthy level, and labor supply is diminishing because
Haven't. Oh, there's the tick.
immigration numbers that we see
Ping.
are much lower than they were. So
Jackpot.
those two factors, supply and demand, that's what has kept the
Ping. Jackpot.
in a reasonably stable place.
Okay, thanks. The other thing I wanted to follow up on is if you could elaborate on the potential changes to the SEP that you suggested were part of the framework review, I think.
So the framework review really has two tracks, right? The first track is our policy framework that is reflected in the consensus statement. And we've said that we would finish that and announce it by the end of the summer.
So on down, hit this one.
Along in that process. We've had the meetings that we need to have, and we're now going to be going into, into discussions about, specific changes to language. So that's the framework part of it. The second part of it is our communications tools and practices. Pardon me. And that part comes next. Okay, that's what we're going to do in the meetings this fall. Actually, what we did at this meeting, though, is we sort of prepared the ground for that. We had a meeting where we talked at a high level about a number of ideas. The SEP is part of it. Many other ideas. It's sort of how do we think our communications can be improved? There are a number of ideas. People offered a really, it was a great conversation. Number of ideas, but we're going to look at those with staff briefing and a lot of thought in the fall. And I would say when it comes to changing communications, I would only support things really that only implement things that have very broad support. And also you want to be really careful because I think our communications are pretty well received. They're not broken. So more is not necessarily better, but better is better. So we're going to be looking at ways to do things that will improve the clarity of what we do for the benefit of the public.
Thanks, Chair Powell. Kelly O'Grady, CBS News. You're famously known
Ting.
based on data. And
Jackpot.
You've said today the inflation data is in a good place. We don't know.
Ting, ting, ting. Chicken dinner, baby.
Forward. That's uncertain.
Oh, yeah, we're so fucking close.
In December, and there was.
Now all they got to do is grind.
So what?
That was a sweet fucking hit right there.
Then,
Intraday expectations.
where it is today.
Bam.
Didn't cut today.
Done.
Well, the forecast for inflation in December was 2.5%. Core PCE for 2025. The forecast was 2.5%, which is. I think what we've learned is that
Fucking fire, bro.
before we had any idea of what the actual policies would be, we've learned that the tariffs are going to be substantially larger than forecasters generally thought. And we don't our
You know they're gonna go in the hole today too, right?
particularly different from those of other.
This is gonna be a big old fucking grind right here. This 1600.
What we learned, and particularly in April,
Big old swoop. Woo.
larger tariffs were coming, and that would mean higher inflation. That's what happened. And so now you see
Get rid of most of this crap down here.
December, you saw 2.8% in March, and you see 3.1% now. So it's 0.6 higher inflation for 2025, and that's a big part of the change, and that's due to the effects of the tariffs that are, we don't know where they're going to land, but it's pretty apparent they're going to land higher than outside forecasters were really guessing at the end of last year.
My follow-up to that, I think consumers, right, we're looking for relief on rates when it comes to mortgages, car loans, small businesses want to take out more manageable loans. When you look at the cumulative inflation over the past 5 years, prices have risen over 20%. It's been a rough road. So what is the tipping point then for the wait and see approach in terms of how much it's going to help versus when it hurts the American consumer?
New low on the half hour at 3 p.m.
Best thing we can do for the public that we serve is restore price stability. If we can, and we will, restore price stability, meaning 2% inflation on a durable, sustainable basis.
You lying ass. You lying. Come on,
we restore
Rome.
those things. That's the best thing, and that is our goal. The best thing we can do for the American people, for health.
Well, that is your goal, bro.
That is the ultimate thing that we can deliver. And they can make their...
Eat some of this crap down here. You're like, get rid of all this.
So in the meantime, we have to...
Leave this. We'll come back for that later. We're not done down here.
Very high. Let's be honest. I would say...
Trading 590, 657. Remember, in all of the excitement...
It's not performing as though it were performing.
Remember, in all of the excitement right now, I want you to think to yourself, are you a person that's very chill here?
And so what...
Or are you a person with your hair on fire?
Is coming down. Now, I would say...
Are you smiling?
That confidence would be building.
Or are you this?
If you see what's happening with non-housing services and housing services, which are the other two big pieces other than goods, those are coming down really nicely now. So I think we have to learn...
I want you to think about that right now.
I don't know what the right way for us to react will be.
On highs and lows, what are you doing?
How we should react until we see really the size of the effects, and then we can start to make a better judgment. So that's what we're doing, and I think we can take the time to do that.
Yeah, Peter North is selling puts to suckers here.
Wages are moving up. Real wages are moving up at a healthy clip now.
He doesn't care. So, all right, so let me explain the trade.
% headline inflation over a 12-month.
So let me show you where
it's a good economy.
Let's scale up here for a minute.
Decent growth.
Easy, Stevie. So, Peter North might be a little bit early, but you see this right here? You ain't breaking that shit today.
Over the past 3 months, and this is all moving in the right direction. So, are
you can break this,
should expect
but today more than likely not.
In the second half of the year?
So what he's doing is, as we approach down here,
what I can say is
anywhere from like here to here,
inflation has come down.
You got like a bunch of put buyers, right? And puts are at bid. They're expensive as fuck.
Job creation.
So he doesn't care. Peter North doesn't care if we go down here. He just cares that
a good place. So
we got a day off.
We're waiting for to reduce rates.
And all these puts will be worthless.
With really the tariff inflation. And there's a lot of uncertainty about that. Every forecast.
So every trade has two sides, right?
Forecaster with adequate resources. And
so you're all excited. You're like, oh, bro, we're going to go down here, bro. We're down there. That ain't happening.
Meaningful increase in inflation.
It might happen. It's possible. I mean, there is risk. You've had like a, I don't know, a nuclear bomb go off somewhere. I shouldn't say that. You shouldn't be trading that either.
The import.
You shouldn't be like trading, hoping for a fucking nuclear bomb. I'm sorry.
Or just the consumer.
It's like a .0000000000000 outcome.
But ultimately, the cost of the tariff has to be paid, and some of it.
And you're leaving a little bit of, a little bit of this behind, a little bit of this gap.
Say that's what the.
Just a little tiny bit. So, and what does that serve? Do you guys know what that serves? As an inflection point.
See a little bit of that before we make judgment.
Place to return, right?
Follow up on that. So
maybe we murder all those puts, then return afterwards as Peter North gets out.
Now you're making
We're back up again, right?
Forward.
And it doesn't even have to be filled, does it?
Indicate there should be a rate cut.
No, I mean your monetary policy has to be forward-looking. That is elementary. You've got to be looking. I always talk about the incoming data, the evolving outlook, and the balance of risks. That we say that over and over and over again. So it's always forward-looking. If you know, at the very beginning of the pandemic, we cut rates to zero immediately. Nothing had happened. We just knew that it was going to be really bad.
Well, we're not supposed to do it. We're supposed to get near it.
Forward-looking, because we knew things were going to be unusually difficult. So, of course, this is something we sort of know is coming. We just don't know the size of it. And again, the economy seems to be in solid shape. So the labor market's not crying out for a rate cut. Businesses, were in a bit of shock after April 2, but you see business sentiment, you talk to business people now, there's a very different feeling now that people are working their way through this. And they understand how they're going to go, and it feels much more positive and constructive than it did 3 months ago, let's say. So again, we think that our current stance of monetary policy is in a good place.
We lower expectations and we get out before we ever get near it.
Thank you. I'm Mara Mokwe with Bloomberg. Chair Powell, in February, you told Congress that the Fed is, quote, overworked.
Well, there is something else here, too, which is what?
Memo to staff.
So let's talk about that really quick. So
you said you wanted to ensure that the Fed was, quote, right.
Those two statements. If you have a target here and a target here,
What changed in the roughly 3
if you're that's your target, right? If you're heading down to it,
staff levels at the Fed should decline?
I don't
you're out, right?
intention, so
Before you ever get there.
is the Fed overstaffed?
And then you're just watching. Do we hit it and reject? Do we go through it and then reject? And even then, it tells you a story, doesn't it? That's your wick, right? Whoop, wick.
But we do.
Same thing up here, right? So you're like, hey, we're gonna print $10.
Stewards of public.
You're out before you ever get there, right? You don't care what happens in there. You don't care if it fails.
Where the Fed has
Even if you know it's gonna fail,
buyout.
it doesn't matter.
We're going to show the public. We're going to demonstrate that we are.
If you ever hear somebody say we're gonna trade this number,
We thought, and
if you ever hear somebody say we're gonna trade $100,
we can,
you should be like,
our headcount is
all right, I'll take it to 80 something.
over the course of
Or if we've already hit 80 something, 92.
of the board
And
the reserve
you ever notice how you have, in cash market particularly,
employees.
not so much futures.
We can streamline our operations, and
Yeah.
we think we can get
Everyone likes to measure.
a couple of years. We think
You really don't have to.
and we
How to prove that point is
this is with taking risk.
if you look at Bookmap on
Critical mission.
cash market, not futures. Futures tells you a better or a closer where we're actually going.
Do it again. Respect.
It's like you watch futures,
I've had
but you're trading in cash market. Listen closely to Cappy over here.
with
So you want to always be looking at like zeros and
how
fives,
you do it professionally,
and you want to think about the increments above and below it.
and you do it over a period.
So if we're targeting like $10,
the Fed will be fine.
as you approach it, you're going to look about $2.50 below it.
And I think it's just us.
What is that?
demonstrating
$7.50, right?
are actually
And you want to see like, are you so how about I'm trading $8.50? I'm looking for $8.50. I'm bullish.
wiping out.
We're going to trade 10.
Count growth.
So $8.50 is the target.
We wanted to show.
And do you trade $8.50? Do you fail $7.50? Do you trade 10? Do you trade $12.50?
Are you on track to meet?
And how many times have you been there?
As you know, we're doing a.
Do you hold it? Do you reject it? Do you fade it? And normally, as you approach key levels, you'll see different
I don't want to
reactions.
do it every year or anything.
Make
but
sense?
Do it at intervals, and you.
So if someone's like, "Hey, we're going to trade $500, man,"
not
probably like
interfering with your ability.
82.50 would be best if you're that bullish. First attempt, and you probably want to rein in your expectations slightly lower, and then maybe let some runners, go higher, something like that. You don't need to be like measuring shit. You really don't. I do measure sometimes, but I'm like, do you really need to? Like, you can literally look back in time with just candles. Before they even had measurements, they just used candles. It's finite math. So you're like, what are we bullish? Are we bearish? Are we neutral? And if so, what's the range?
Discuss. We take.
Right? If it's neutral, what's the range?
Fully exogenous.
If it's bullish or bearish, what's the target?
So
And do you really care once we get there? You shouldn't.
about the bill.
You should be like, I'm already out. Leave that to the what?
When it
Leave it to the FOMOers, the doomers, and the people that lose all the time.
effects will be at
And what else is happening in those places? So if let's say you got $10 and $15.
next meeting we'll make an
$15 is going to have less buyers and sellers, but still concentration. But the zero is going to have big ones.
a couple of times, but
So like you come into $10 or $20 or whatever, and you know that you're going to have a transaction there. You know that there's going to be people saying, "Hey, do you want to buy $20 calls?" Yes, I got a bunch of them. Make sense? And then you get like a bunch of people like, "Yeah, man, I want $20 calls, bro. We're going to $30."
Problems around funding.
So you go. I mean, you can simplify this. You don't even need to look at gamma or any of that shit. Like, you really don't. Like, just be like, okay, so I want some $20 calls. Thanks for selling them to me. And all of a sudden, you get faded, right?
two things.
So that guy on the other end thinks, or that gal or whatever thinks, that your $20 call that he sold you for $10,
That's not the point. The point
or
really
$30 call or whatever,
we're starting to see
is not going to be worth that money at some point in that transaction.
and
At some point,
gatherers of data are saying that
if not
having to cut
worthless
their surveys
at the end of the life of that contract,
in the surveys
even if they hit it afterwards.
and
So like, you don't have to get,
standpoint, and I
you
think
don't have to be like oh, I got my third order like row and shit. Like, you don't. I mean, you can do like a basic of that stuff.
is a huge.
Is it cheap or is it expensive?
It not just doesn't help the Fed. It helps
Are you buying something that's expensive or cheap?
the executive branch.
Does it have enough time on it? It's like really simple shit.
To know what's going on in the economy. The United States has been a leader for many, many years in this whole project of measuring and understanding what's happening in our.
They are okay with rates.
Economy. And I hate to see.
They are.
See us cutting back.
You know why they're okay with rates right now?
Real benefit to.
Because the consumer is good.
People in all kinds of jobs have the best.
You don't understand that.
Understanding of what
companies are ruthless,
and hence what's likely.
They will fucking do anything they can possibly do to not change anything and just take more of your money until you say no. And the only time you say no is when the consumer is not well off.
Very, very difficult.
That's how you get persistent or sticky and not sticky and not persistent.
I just would.
Right now, you'll complain about it, you'll yell, you'll scream.
I would want to keep
but until you can no longer afford it,
of the general public,
they will do whatever they can until you say no. And then what are they doing? They're raking in profit.
Hi, Victoria Guido.
And then they lie to you.
So you're conducting this monetary policy.
Let me explain some of this shit to you. You got people out there telling you, I'm so sorry. I have to raise the price of your can of beer because of aluminum. The tariffs are 50%.
You know, the framework.
And so that means the beer is now, 50% more. And the input cost to that beer is probably like
it's the committee.
5%.
It's not like we're going to invent a brand new way to do things.
You know what I mean? It's like
So
I don't know if all of you have ever been in a C-suite. I'm going to promise you something.
Economy and what the committee wants.
They have professional CEOs. They go to school for business. I went to school for business.
And
they are weirdos. They're like sociopaths.
Now we do it every.
They would probably be.
I don't think anybody.
They'd probably be a murderer in real life. Like like psychopaths and shit. Like people that like
might want to come in and go in.
I don't know. Like what is it? I don't know what the fuck it's called. Anyways, like there's like that one movie with whatever his name is in it. He's like a cold-hearted bastard. That's who those people are in real life. They have weird families. Like their wives are weird, their husbands are weird, their kids are weird. Their whole society and culture lives within like Rotary clubs. And like, I shit you not. There's like a whole like, and then when you ever get inside of a major corporation or even a mid-sized one, not a small corporation, not a small company, not a small private company, but like in a mid-sized, I'm going to make a career out of this. They're fucking crazy. Promise you. I spent at least 10 or 15 years working for these guys as a contractor, and you get inside that fucking C-suite for a minute with the door shut.
So of course we're watching.
You're just like, holy shit! And then their bag men are all their department heads, and then they like have a public persona, a persona for
you may see a spike in
their employees. Mid-level management, but then those directors, like that C-suite director shit, they're gangsters. They're ruthless. They're not as ruthless as the CEO or the CFO. Those guys are fucking, trust me, weirdos.
Anything like that now. The U.S. economy.
Oh no! What about your puts, bro? Oh, their puts are getting cheap.
A quick follow-up. I've just got to ask you about artificial intelligence. Some technology executives have recently.
Oh, dude.
AI could wipe
Who bought those puts?
of entry-level jobs and significantly increase the unemployment rate. I'm wondering how concerned you are, if at all, about the threat that AI poses to employment.
So this is the question. The question really is, will AI be more augmenting labor or replacing labor? And I wouldn't. We all see those announcements, including one today. I wouldn't, overread a couple of data points because, AI should be creating jobs at the same time. It may be replacing, maybe doing both. Anyone who's done any work with AI will have been a little bit stunned at how capable it is, and it's just a different thing. So, I think this is something that certainly has transformational potential.
Creating jobs.
We're in the very early stages of it. They say what you're seeing now compared to what you'll see in 2 years is going to be very different and even more effective. So I think it's really hard to know. Of course, there are optimists who feel like it's going to make everybody much more productive.
God damn.
Those who think it's going to replace an awful lot of jobs right across the income spectrum, white collar, blue collar, and everything. So I just don't know.
Oh, God, we just had a bunch of put bag holders down there.
But this is going to be a very important question for some time.
Greg.
Thank you. Greg Rapp from MarketWatch. I was wondering if you could step back a little bit, Chair Powell. There's a spate of articles and a lot of op-eds now.
Discord's off the chain right now. I apologize.
The global economy is going through this profound change, akin to the end of the Bretton Woods era in the 1970s. And don't you owe the American people some sort of explanation for what we're going through? I mean, I noticed earlier this month when you talked about Bretton Woods a little bit, and you said that Bretton Woods, the Fed staff had to
So when we get into the late part of these interviews, you get the weirdos come out and asking questions. These guys live on FinTwit. Watch this. These guys live on FinTwit. They're like, are we going to get rid of Bretton Woods? Can you answer that question for me right now in this Fed meeting?
It's certainly a time of real change. From a
I want you to tell me that Bretton Woods is dead.
From an immigration standpoint, you see this not just here but everywhere. So there's quite a lot going on. It doesn't change the way we do monetary policy in the near term. I mean, but
this was a weirdo. This is like the C. This is like the.
These things are not really our issues. They're really issues for.
These reporters are like the bullpen.
There's no question. It's a time of real change. And very hard to.
These are the guys that write the stories that are like Jerome Powell admitted that we're getting rid of Bretton Woods on Wednesday.
About how it's going to be more.
He couldn't tell the truth, but we all know what the truth is.
Guaranteed. AI could cut in the very other direction. AI could make people much more productive and push.
It is. I agree. It is going longer than usual.
But honestly,
317
is a much more practical one, and that is how do we keep inflation low? And
if you don't know, I'm going to let you know in the stream. Okay, we're going up into Friday. Up. We're going up. We are going up. We also have a DivX thing we got to do. We're going up. If you don't know, you can. I wouldn't fuck around with single options. I would look for a low into the close today. Try to get an in the money call spread.
Employment rate. And the ability of workers to demand.
No, you're not hitting 5905 on OPEX. You might hit it. It's possible you can hit it on end of month, but that's in a week. That's 8 sessions away.
You don't see increased slack.
And that's not a guarantee. You could hit that shit a week after. Literally, you could hit it a week later. So we're going up. And not only that, we got. I want you to think.
Came out of the pandemic, we were at 3.4%, but
you've got NFP.
Probably. At the low end.
Let me ask you a question. Do you think we're going to trade down into NFP? Possible. But if we do, are you longing NFP? Yes, is the answer.
I wouldn't agree with that. And also,
we're likely going to trade up into NFP and then sell it down.
Inflation.
You get the pop, you trade up into it, pop, and then an hour later or whatever, we start selling that shit down.
They're still
And we'll run this fucker straight down
at a healthy clip
after NFP into month end, back down to 600.
Given a reasonable assessment of.
Look at the brief I gave you last night.
So it's a pretty good labor market.
It shows we're going to go there and here and there and here.
Come down, but so has the supply of work.
Sometimes I get it the opposite, but I want you to think about those things, and more importantly,
the unemployment rate remained pretty stable at 4%.
Where do you think the market wants to be on this date with this report?
Those are good numbers. So it's a pretty good labor market. There's a more concerning thing is.
I know, dude.
There's not a lot of
and then they're going to get murdered. That dude. You know what the worst part about what this guy's saying in the Discord right now? He doesn't even care about price. He just knows that there's going to be what.
So that's an equilibrium.
IV crush. All of these people are leaving.
Finding rate were to remain this low.
So if you've got 100 people trading,
but that hasn't happened.
100 people hedging.
So
100 people doing this. Does price really matter? Yeah, I don't know.
Really over the last 3 years. And it's been
IV crush.
When people think it's going to weaken out. Eventually it will, but we don't see signs of that now.
Go to Gene for the last question.
You get people going on vacation. Go close up the laptop right now.
With MNI Market News. There's been a lot of talk about cuts.
And you're trading with yourself back and forth. Ping pong, ping pong, ping pong.
Or even to stay where they are.
Where's all the IV in my options, man? Where'd everybody go?
For inflation is
Bro, the party's over. They're going to come in. The janitors are going to sweep up. Bro, they're not going to stay here and trade,
event.
They're going to sit here and trade FOMC with me?
People on the committee who wrote down.
They're going to trade OPEX with me?
Next year. So, I think, people are writing down their most likely path, right? They're not saying there's zero possibility of other things. Really, it's, think of it as the least unlikely path in a situation like this where uncertainty is very high. I think, again, people write.
If you're new to the Discord, I write posts that say at everyone.
This is exactly what's going to happen over the next 2 years. No one feels that way about their rate.
You want to read this post right now on the Discord.
It's not easy to do that with confidence.
Read this post in the Discord.
We don't rule things in or out. Certainly, a hike is not the base case.
The one above where I said read.
People are writing down, but
with the name on it.
We do the best we can with these forecasts, and I think they're.
I'm going to start hitting it with some emojis. Here, there's a goat for you.
That people on the committee have. So thank you very much. Thanks.
All right, so we're over yet. We're done. Now watch some Vol Crush. If you are in our Discord, I posted or I showed that volatility is supposed to get crushed. We had no bad news from the Fed today. None. Nothing to increase volatility. The at-the-money vol curve on SPX. Now we still have geopolitical vol, but what happens? Start looking at VIX 30-day. That's the regular VIX 30-day. Look on TradingView and type in VIX 9, the number 9, and D. Look over the next 2 days and see if vol gets crushed. Also, look at the skew index. Look to see if people are getting long on the skew index. It's ticker symbol in TradingView, SKEW. That's a put skew, but whenever it goes up, it's a call skew taking over from the put skew. Look at that on bottoms and on tops too, please. All right. 3:32 in the afternoon. I hope that you enjoyed yourselves with us today. If you're a member of our community, you guys fucking killed it today. There should be nobody that's in the red today at all. Like, we literally hit every single trade or told you not to take a trade. Congratulations. You murdered the market. You literally took advantage of everybody today. Not here watching the show, but I mean the market. You took advantage of the market. Good job. God damn, we're good. Oh, fucking A, man. Even when we get something wrong, the good is good. 7 out of 10, man. Woo! You guys are fucking gangsters. You going to play the song? I think I'm already fucked right now. I think I've already gotten fucked at this point. I didn't really put the You know what we'll do is, how about we end the stream early today? We can do that, right? We're not getting paid. Matter of fact, we're probably losing like, I don't know, $100, $200 or something. You're in our community. This one's for you.
Cash rules everything around me. Cream, get the money. Dollar bill, yo.
I grew up on the crime side, the New York Times side. Staying alive was no job. Had second hands. Moms bounced on old men. So then we moved to Shaolin Land. A young youth, you're rocking the GOAT.
We're here Monday through Friday during market hours.
And let's start it like this, son. Rolling with this one and that one. Pulling out gats for fun.
Here's to all of you out there, by the way.
Who was a fiend, started smoking wools at 16 and running up in gates and doing hits for high.
If you want expectations into Friday, up is the way.
For cracks and weed, the combination made my eyes bleed. No question, I would flow off and try to get the dough off. Sticking up right boys on board. My life got no better. Same damn low sweater. Times is rough and tough like leather. Figured out I went the wrong route, so I got with a sick tight click and went all out. Catching keys from cross seas, rolling in MPVs. Every week we made 40 G. Yo, brothers, respect mine. I ain't gonna tech now. Bow, move from the gate now.
Cash rules everything around me. Cream, get the money. Dollar, dollar bill, yo. Cash rules everything around me. Cream, get the money. Dollar, dollar bill, yo.
It's been 22 long, hard years. I'm still struggling. Survival got me bugging, but I'm alive on arrival. I beat back the shape of the streets to stay awake to the ways of the world.
Did we ever hit 92? Yeah, we might hit 92.
At the age of 15, a young buck selling drugs and such, who never had much, trying to get a clutch of what I could not.
There's a chance we could hit.
Face incarceration, pacing, no one upstates my destination.
There is a chance. I don't know if we hit this, but there's the weekly right there, right?
Turned, I learned life was hell. Living in the world, no
So here you go.
Every day I skate from takes, giving chase, selling bass, smoking bones in the staircase. Though I don't know why I chose to smoke cess. I guess that's the time when I'm not depressed, but I'm still depressed. And I ask, what's your work?
There's no requirement to this, but on a weekly basis.
Working hard may help you maintain to learn to overcome the heartaches and pain. We got stick up kids, corrupt cops and crack rocks and stray shots, all in a block that stays hot. Leave it up to me while I be living proof to kick the truth to the young black youth.
We satisfied it here, but
and ain't trying to hear what I'm kicking in his ear.
We're gonna trade 604 next.
To be accepted. That what? The life is hectic.
Maybe tomorrow.
Cream, get the money. Dollar, dollar bill, yo. Cash rules everything around me. Cream, get the money. Dollar, dollar bill, yo. Cash rules everything around me. Cream, get the money. Dollar, dollar bill, yo.
Way is higher. Possibly fade this.
Get the money.
Wham. Just to kill options. So it's in a dotted line. But it doesn't really matter between now and then, does it? Fuck no.
Dollar, dollar bill, yo. Cash rules everything around me. Cream, get the money. Dollar, dollar bill, yo. Cash rules everything around me. Cream, get the money. Dollar, dollar bill, yo. Cash rules everything around me. Cream, get the money. Dollar, dollar bill, yo. Yeah.
If you're looking to stretch it, there might be a if you're looking to stretch this, there might be like a murder bot coming into the close. But if you can catch like 92.50 somewhere down here, anywhere in this vicinity. If you're looking for like a call into Friday or something, like 92.50. Just watch this closely here. I got one more trade for you. This is where you get a wick from right here. I don't know if we'll get it, but watch this closely here. There might be one more trade here. So this is fake, by the way, if you don't know it. It's fake. It's happening, but it's fake. It's meant to it's meant to kill options. So we'll see what happens. If you're looking to put a spread on for any point in time in the future, then you might get it right now. It might just happen. If I was a dealer, I would do this right now. Let's watch this closely here. Right here. Right there. Watch that right there. It's fake. It's all bullshit. It's not real. This is not like real price action. It's a dealer that's selling market right now. They're going to scoop it right back up. They're going to offer this to another market on a low, and it's going to get ramped. If you're looking for a long, it's right down here somewhere. You should make the trade to 602 to print. 604 would be nice. Watch it right here. Hold on. Hold on a second here. Right there. Somewhere. 5950 in futures. No, you're not going that deep. That's too deep. Hold on. You're not going that deep yet. You're not doing that shit till end of right it's too deep. Yeah, no, 592. Yeah, it's right there. Right about there. Right at the bottom. You'll see the they're hiding the bars down there. But they're down there, I promise. I don't know if we can get there, but if we can, just be patient. Might take some time to get down there. Sometimes what they'll do is they'll do this. They'll hold this up, and they'll hit it after at like 4:15. You could, if you're in cash, you could do it right now, and it ain't gonna matter. Or you do it at like 4:12. Sometimes they'll do 4:15, then they'll do this, wham, straight down and then up for futures. This could be bottom in cash right now. One more. Come on, just one more. But it's Fugazi. It's fake. Fake price. Yeah, but it's real, Cap. I see it. Nope. It's a function of dealers trying to fuck over options. That's it. It's like a temporary price. If you're watching this show and you've never watched a show before, you got a body of a candle in a higher frame. And you got another candle up here. And when you're looking back in time, you never think about the wicks. So David AMS, one of fucking badass trader, he always tells people like no one ever remembers this stuff. Or they remember that, but they never remember this. And you'll hear this adage from traders. They'll say the body does tells the story. The wick does the damage. And this is where dealers live. Like, you're like, I bought this, or I bought this, or I did that, or I did this, and I don't know what happened. You're like, there's an easy way to describe this. An option will be $1. Like right here. And then it'll wick down, and that option is now like 10 cents. In that little moment, just gets torched. It was like, $1.10, $1.20, right? Like 10%, 10%, 10%. Then all of a sudden it's like 90% of value gone. So you're like long here. You're back up here again when it finally turns. And it's like 20 cents. You're like, God damn it, I'm at $1, same price. Now they're 20, and I didn't wait for this last little wick down here. Now I got to add more and create fuel. Send it up higher. I don't know if we can get there right now, but if we can get that deep. If I was a dealer, that's what I'd do. I'd murder the fuck out of this and then ramp the fuck out of it. And then of course over the weekend I'd murder you on theta. Right now, I want to tell you guys something. Over the past like every year or two, markets change rapidly right now. Every year or two, there's like new. You can see that there's algorithms, not out just algorithms. There used to be like algorithms, HFTs, and stuff, and then like the advent of AI and prop trading, and then it's like we're like max dealer. I say it's dealer fuckery, but it isn't. It's like dealers competing with other parties right now. So you're seeing less and less like hits on target eventually. They're very brief in cash market. So even if they don't do it, like you're like, oh, I know it didn't do it. Like let's say when they are going to hit it, it'll be like really brief, or it'll be to a tick. It'll be very, 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 very close. It used to never be like that in the market, but the faster the market becomes, the more it happens. You can even see it right now. And if you look at just price action, if you go on, I know you can't do it on TradingView. If you go on like a Webull account and you show after hours and extended hours, it's glaring. I've seen it, but not the frequency of it like I see it right now. You got to be on, like, literally, if you're a human trader right now, you have to be almost in market all the time, or auto sell levels. Like if we hit this, if whatever your target is, go slightly under it by like ticks, 2-3 pennies, 4 pennies. The market is becoming almost like you have to have I don't know, attention deficit disorder or something like that, to just be watching how closely and how infrequently your targets are. So you kind of like have to rein in where you want to be, or you have to have a bot doing it for you, or you have to hand stare it. Especially in cash market. Not so bad in futures. A little bit easier in futures, of course. Trading cross markets and stuff, it's easier. There's more spread. But if you're just a cash market trader, oof, brutal. If you're a good cash market trader, you can trade any market. I'll be honest with you. Like futures to me is easy. There's like such a spread. It's stupid. Sometimes you're trading by yourself. You're like selling and buying to yourself, but it's not easy as a cash market trader these days. I can't tell you that it's easy. It isn't. It's getting more difficult and more difficult and more difficult, and they're going to make it more difficult too. Eventually, you'll get rules passed against you as time passes. I assume that'll happen over the next decade or so. Everyone will move to computers at some point. Yeah, I think like, you know, you have like the end of the floor trader. I think the end of the human trader is coming, just like it did for the floor trader. It's finite for sure, unless you're really fucking smart. Like you're not many people will be able to compete there, or maybe higher time frames. But even then, I don't know if you can compete. The speed. I wonder about like the speed of the market at some point, how it'll move. Could be even faster than you could even attempt to trade with it. I think that's a little far-fetched, but it's farther out in time. But nice dog on it. I want you guys to have a great day tomorrow off. If you are celebrating Juneteenth tomorrow, God damn, man. You guys still don't have your freedom in this country. And that really fucking sucks, you know? I have one of my best friends is a black man. This guy's like, he's everything that breaks every stereotype. This guy's got 2 kids. He's got full custody. He's got a job. Breaks his dick day in and out. And he's a black man in this country. And so he's always got fucking problems. It's like the cards are just stacked deep against him. So if you are a black man out there, keep your chin up, keep doing the right thing, and keep beating those stereotypes. And just remember that a lot of people just they don't have experience. You know what I mean? They're in fear, man. People live in fear. That's bullshit. Well, you guys have a great weekend. Try to be nice to your fellow man, no matter what their race is, their creed, no matter what their religion is, whatever they are. Try to lift each other up. We're all plebs around here. I'm serious. We got so much shit against us as like plebs that they turn all of us on each other. We're eating each other alive. We shouldn't be doing that shit. There's so much shit that comes their way. I was talking to my daughter about this, and that break I had, I was like, there's so much out there, so many landmines for you as a person. Think about that. If you're watching this show and listening to me right now, think about like in your own life how many like landmines you like step on, and there's so many of them already in life. We don't need more of that shit. You know what I mean? You can do whatever you want, like bitching, moaning on socials and stuff, but in real life, try to be kind and to your fellow human when you can, because you never know when you're gonna be like down and out and fucked and need that helping hand. Seriously, dead up. You guys have a great day off today. Trust me, I'm telling you guys, like a little bit of honey and some shit goes wrong, people will be behind your back all day long. They'll lift you up, I promise. You never know. You never know when you're going to need that help. Shit goes sideways. You got that's wisdom, man. You guys get older, you figure that out. You make mistakes, you fuck up. You need people on your side when that shit happens. Especially like wife leaves you, kids hate you, whatever, all that shit. Like, you gotta try to, and you gotta make mistakes, so try to as good as you can. I want you guys to have a great day off tomorrow. I think I'm gonna end the streams early today. It's 3:41. You guys got a mark down here. If you can trade 592 anytime between now and close, buy it. 100%. I don't know if you can get it in cash air, but we're pretty fucking close. Well, you can be a dick. Hold on, let me preface this too. A lot of people have thick skin or thin skin too. I watched yesterday. Watched a video yesterday of I think it was JPM or GS was having a symposium or some kind, and they were talking about money, and a guy went into that discussion or whatever, and he freaked out, and he was really angry at JPM or GS. And I felt that guy's anger, and on the same token, you and I trade a stock market, and you and I, no matter who you are, you can try to make it sound great in your head. Like, well, I only short the market because I know it's a fraud. Bob on Main Street doesn't care. You're a pariah to him. Whether you're doing what you think is the right thing or you think it's just money or something. I want you to think about that too. Like, everybody's a pariah in somebody else's eyes. You know what I mean? So my point here is this: retailers are really thin-skinned. There's like gallows humor in the stock market for professionals, and they're ruthless to each other. They all think they're the smartest, and they all want to beat each other. As retailers, I don't think that's the norm. I think most retailers, especially as new generations come in, they don't want to see, hear, or any of that stuff, but it is a part of it. For good or bad, it's like black humor, and there's anger, and there's frustration. I want you to think about it when I want you to think about like when that hurts you. It's okay. It hurts me too. But don't like smash your toys and say I'm going home either, because you'll be on the other side beating that same bush, right? And I'm feeling it, or you're feeling it, or whatever. It's like a part of what we do. It really is a part of this business. If you're a retail stock trader, investor, that's part of it. I realize you can say, hey, that's not allowed or whatever. It isn't. Do your best, like, hey, I'm not going to say this word or disparage this person or whatever. But just realize that it is there. The military is like that. It's like we used to like dehumanize people, and it's so you don't feel anything, and also so you can do certain things you wouldn't normally do. But it is a part of this. People have a lot of money in the line. People have they can't talk to other people. They can't talk to their family, their friends. So just note that it's in there. Note that people are gonna get mad. Note people are gonna freak out. People are gonna like fuck you, man. I want to fucking kill you or whatever. And that is an emotional part of. There's emotions in this stuff, right? Come on, that's real. So let them slide or whatever. Give them a timeout. Walk away. Don't engage. You know, and they'll calm down. I calm down. You calm down. It happens. Just note that it's part of this, right? That it's never going to be what you think it's never going to be something everybody's going, hey, Bob, how you doing? Checking in for work today. You know, how many electric lines are you putting in? It's never going to be that job for you. It's always going to be like filled with, you know, raunchiness and grossness, and just make sure that you're coming at it from a not trying to hurt somebody, I guess. It's in jest and not in like hate. All right. Well, you guys have a great day. Have a great day off. Chill. We got one more day left, right? We got a murder bot day tomorrow. We got one more day left on Friday, and then we got 2 more days off, right? And then we come swooping back in for next week. Oopsie, I'm losing power in my house. Okay. I'll see all of you guys tomorrow at 9:30 in the morning. If you've never seen this show before, hang out. You don't have to pay nothing. Just watch the show. It's free. Hang out, get familiar, and we'll do this again. I'll see you guys on Friday. And please be good to each other over the weekend. Don't get any trouble. Help your fellow brother man out, dudes. Seriously. How do people supposed to get a leg up in this life? Seriously. Help a brother out. For real. Man to man.